Perfect. Welcome everybody to AMA number 23. It's been almost 2 years since we started doing this. It's funny because I thought this was 24. I thought this is actually 2 years. I'm pretty sure it's been 2 years since I started doing these. We started with a very, very small group. I'm talking 8 people total who had access to my Hearst course. By the way, I think most of you have not seen that on YouTube, and I highly encourage you to watch at least the first 3 lessons. It was not my best recording. I was actually just starting to do video about oh, it must have been 3 years ago now. It was 3 years ago now. I started doing the first videos, so not great on that front. I had notes and I couldn't keep track of them, but the content is still good, and I re-edited everything so that the content is good. Um, I've watched those lessons, and I can tell you nothing's changed since then. I'm teaching Hearst on lessons 1 through 3. It's just Hearst. And you're gonna be able to to make sense of a lot of the stuff that I talk about a lot more if you understand those concepts, because this Discord, this chat group, everything started as a way for people to study Hearst. Of course, it's migrated into just an AMA with content and people asking questions and forecasts and what am I doing, and markets and whatever. It evolved, and that's fine. But I'm still a Hearst cycle trader. So a lot of the stuff that I talk about, a lot of the stuff that I do, a lot of the stuff I'm going to show you in this app, if you don't know anything about cycle trading, you might still find it useful. But if you know cycles, if you know Hearst, it's going to be a lot more useful to you, and it's going to make a lot more sense to you. Now, the announcement that I have to make before we get into market analysis is that I'm starting to open up this app that you see here. Now, right now it's being hosted locally. I am going to share the link to the online version of this app after the AMA. And actually, I need to rework the Discord. I need to rework how some things work. Now, let me just lay it out for you. The plan is to allow some of you, the ones that I know personally, the ones that I've verified, are here to learn and to share and exchange ideas. Some of you already have access to this, but it's only a very small group. Now, I'm opening it up to a larger group. It's still going to be 10, 15 people. Eventually, it's going to, so that closed beta type thing, and eventually it's going to migrate to an open beta where anybody on the Discord is going to have access. You need to create an account. I'm not going to show this account creation process here because it's super standard. I'm just going to walk you through the app briefly. I think I've done this, but I'm going to do it again here briefly. And I'm going to create a specialized group within the Discord to share feedback, ask questions specifically about the app. Please do not flood me with questions. I know I've been a little absent from the Discord lately. I try to keep up. But yeah, creating this thing is a lot of work. And I'm also starting some new projects at Wise. It's going to be a lot more work. So yeah, I do what I can, you guys. You know that I have you close to my heart. And I love this Discord and I love this group. And I'm trying to share the most value with you all. This is like the most intimate community that I have. But yeah, apologies if I don't get to your messages, if I don't reply. I do apologize. It's just it's a lot to keep up with. Now, the app. You're Everybody watching this, you're gonna get access within the next few months. Some of you are gonna get access by next week. Some of you are gonna get access within a few months. So you're all gonna eventually be able to access this application. One thing that I want to uh, make clear to you all is this is under development. And the reason you're getting access is because I want this feedback from actual users that are maybe not as technical, maybe not as, they're just fresh set of eyes that have not been looking. I've been looking at this dashboard for every day for months now. And you know, sometimes you don't notice certain things, and a fresh set of eyes is always super useful. So there's 3 sections to this app, and I tried to color code them accordingly. Not accordingly, but like a color for each section. The purple section is the monitoring dashboard. I admit I don't personally spend a lot of time on this, but the idea behind this section here is that you can see several tickers and their upcoming turning points at any given time. So you select what I have here. Some of these are not going to be available in the online version. This is like BTC hourly. These are tests. This is weekly gold. I think I have inverse gold in here. Yeah, inverse gold. You're not going to get any of these on the online version. But let's say I want to see what the stock market is doing. And what you can do is select, you know, the semiconductor ETF, which has been hot lately. The S&P, and let's find the Nasdaq and the Nasdaq. And so you want to see upcoming turning points. You can select here a frequency range. These are the cycles themselves, so the frequency of the cycle, and you have this double slider thingy here. You can select up to a minimum of 20 days. This is on purpose, and it's not going to change. There's a bunch of really small cycles within the app, as I'm going to show you. The forecasts for those are complete trash. It's just noise. And so I don't want to pollute this dashboard with cycles they're really just placeholders. They're not even meant to have forecasts. And in a future version of the app, I may just do away with those. There may not be forecast for any cycle that's less than 20 days, simply because there's not enough resolution in the data to make a forecast. And so there's just trash. So up to 20 days and up to 2,000 days, this will change. It's going to be up to whatever the longest cycle is. I don't know why I set it to 2,000 days, to be honest. But if we want to focus, let's just say I only care about like medium to long-term cycles in any market. So especially the forecast, not for trading, but for forecast, I don't care what's happening in a 20-day cycle. A 20-day cycle, for those of you who know, watch the lessons on YouTube. It's just a cycle that makes a low every 20 days. And yes, you can also flip that and makes a high roughly every 20 days, and it varies per market. So for the most part, Hurst, I think, based most of his work on the stock market. For the stock market, when I say 20-day cycle, it means a low every 20 days. For Bitcoin, that's not necessarily true. You can flip it around. Commodities, Forex, you can flip these. It's a high every 20 days or a low every 20 days. But for stocks, it's the lows that count. And let's say we want to go up to, there is an 18-month cycle. So let's say we want to go up to 1,000 days in case there's a few cycles that last a couple of years. And we want to scan. There's a tutorial to show you what all of these things do. It's not finalized, the tutorial, but it's going to explain what best only is versus scan all versus individual versus composite. There's going to be an AI chatbot at some point. Probably not. It's not for V1 of the app, but there's going to be a chatbot. You can ask questions at some point and say, hey, I don't know what this is. What is this? And the chatbot will also be able to take you to different sections. So that's coming at some point. It's going to sit right there at all times. And you can probably it's going to offer suggestions too, based on what you're seeing. I have the blueprints drawn already, but I haven't started writing it yet. So let's say you want to see what the stock market is doing between 100 and like, let's say, but you know what? This is too long. Let's just, I don't even know we have cycles there, but let's do 800 days. So these are cycles that last between 20 weeks and a couple of years. And and of course, the date selector. So this is centered around July 17, and we want to give it, 30 days, whatever. 30 days is fine. Let's see if we have any upcoming turning points on any cycles in the stock market. So we hit scan. It thinks for a little bit. This should be a lot faster. There we go. We got it. And you can see that we have on the Nasdaq, on the semiconductor ETF, on the SPX, we have cycle turning points. They're all lows. All lows. Interesting. This is not planned. But what this app is saying is that right around July, we should expect the stock market to bottom out on these cycles. Now, I haven't looked at the stock market yet, but I do believe it is selling off. And so I believe this is good news for anybody who's bullish. It's like, okay, it's bottoming out. Again, this is not official cycle analysis, guys. I'm just going through what this app is doing. Remember, cycles can invert. There's going to be a tool at some point that highlights those inversions. I'm not quite set on how that's going to work yet, but it's going to highlight that. And then if you scroll down, you can see the dates when the stock market, these three indices are expected to bottom out. And you can see that they're clustered. The tightness is how clustered these turning points are. Of course, they're clustered because we're looking at the US stock market. This is good news for my application, the work that I've done, because these bottoms are going to be clustered. They're probably going to take place around the same time in reality. And so it makes sense that even though we're using three independent indices, it's kind of highlighting the same thing. Using this framework, we could say that the stock market is expected to bottom out between July 16th and let's call it July 22nd. It's expected to make a low then, which for those of you who are following Japanese M2, that tracks. It tracks with Bitcoin. Bitcoin is correlated to the stock market. So, okay, we have a low upcoming. for the stock market. Now, we do want to mention a couple of things that they are in the tutorial, but just the color coding for these cards is green for good, purple is excellent, moderate means the yellow moderate means it is not such a good model, and red, we don't see any red here, means it's a not such a good forecasting model. Now, this is in the interest of keeping everything honest. Now, how do I read this? Well, I have the 120, 160 cycle reversals coming up between July, according to this, let's say it's July 16th through the 22nd. And we also have on the 19th a 240 cycle on the S&P, but this is a low quality or lower quality model. I don't really care about the 240 so much. It's a lower quality model because it's a yellow model. This is how you need to think about this. These are green models. Green is good. These are good forecasts. The yellow models are not great. When I get to the trading section, I'm going to show you how you can actually use these moderate, not so good models to create fantastic trading strategies. Don't ask me why that is, but that's how it works. You scroll down, you have the convergence calendar. There's going to be an AI summary of what this means for you. That's going to be plugged in probably next week because I'm going to use a very cheap, for those of you who use AI, I'm going to use DeepSeek V4 for this, which is extremely cheap and very powerful for this type of activity. And then, so the ideal flow for the app is you start here with the monitoring dashboard, and then you move on to what I call the cycle viewer. You've already seen the cycle viewer, so I'm not going to spend a lot of time on this. There's some bugs, as you can see here, because this yellow line is not supposed to be up here, but I've already encountered that bug, so I know how to fix it. So the cycle viewer is what you've already seen. Let me switch to Bitcoin. There we go. So it's what you've already seen. You have a bunch of cycle frequencies that you can select here. And I'm not going to go into the advanced mode. I recommend that you do not click on advanced mode, because advanced mode, what it does is it allows you to choose between composite cycles. Composite cycles are just, I take the best 3 models for a cycle and I combine them. The best single cycle is the best single forecast for that frequency. If you don't know what any of that means, then just don't click advanced mode. Just click it off, and the app auto selects whatever is best. So it's going to select composite, best model, whatever's best, and it's just going to show you cycle frequencies. I think 90% of people will never ever click on advanced mode, and they're just going to see forecasts for different cycles. And this is very simple. It's a forecast for, if I click on the 320, this is the model's best version of the 320-day cycle, the forecast. And I've shown this plenty of times before. Notice that this model has been inverted. Everything highlights, it tells you what it is. This is the fitted cycle. You can clearly see this yellow line is an isolation of the cycle, of the 320 cycle in this case. So it isolates it, and it doesn't use moving averages or centered moving averages or filters, which is what I teach on the YouTube lessons, simply because I can have more powerful algorithms isolate these cycles in this app. I don't need to rely on simple tools. So it's a very smooth, very clean, very pretty to look at type of line, but it's really the same thing you accomplish with a filter. It's just filters are more noisy. This one doesn't have any noise. And then the orange line is the forecast. Again, I've shown this plenty of times. You've seen these forecasts play out in real time. We have seen this made to expected high. This model was inverted, so it was a low. Then it made a high. Well, it's expecting another low in August. I think I talked about that at the last day of May. This is the July bottom, because when we move on to the 80-day cycle forecast, I believe it's in July. Let's see, it's May. This is the famous May top. Those of you who follow me at Wise, we sold everything around this date on the 11th of May. And then we have this upcoming June 29 low, which is interesting. If the dates don't match what I showed you at the last lessons, it's because I've been doing a lot of back-end work, refining the methodology for actually creating forecasts. The dates are very similar to what they were before, but I believe on this 80-day cycle forecast, we had July 18 for the next upcoming low. This actually tracks much more closely with Japanese M2. That is by design, because I cleaned up the forecasting algorithm. Rest assured, it's mostly the same. It really doesn't matter. As after many, I spent 2 weeks doing tests, many hour long tests, like several hours just to run these tests. And I eventually realized there's many ways to do astro forecasting. You just have to pick one method and stick with it. So I picked one method, I stuck with it, and this is what we have. There was really no better answer, no right answer. There was a buffet of right answers. I just picked the one that made the most sense to me. There's going to be a white paper within the application, within the landing page. It's going to explain the methodology and the testing that I've done. This is for validation because there's a lot of skeptics of this methodology. So I want to lean heavily on the math that is behind every single one of these forecasts, and the trading algorithms are run on top of those forecasts, because I cannot convince you that there's something to this idea of cycles, but I can show you the math, and then we can argue about the numbers instead of whether or not it's woo woo or not. I don't want to have that conversation. Now you have several tickers. If you want to trade the Hong Kong stock market, there you have it. I mean, I don't know why I think it auto selects the best correlation model, and you shouldn't really do that. One thing that you should know about this section is that when you're picking frequencies, pay attention to these colors, because the purple color means it's a highest quality model. It's a very good forecast. Whereas if I click on this with the red line, already that tells you that this 10-day cycle, the 10-day cycle forecast for the Hong Kong stock market is not great. Now, looking at it, it looks pretty decent to me, but the numbers are not that good. Correlation is only 4%. If I wanted to trade the Hang Seng, and not trade, but really forecast the Hang Seng index, I would probably spend most of my time not on the 4.5-year cycle. This one, it's too long term, and usually the long term cycles have good numbers, even though the forecasts are not really that good. I'm not going to get into the weeds for why that is, but I would spend most of my time on the 46-week cycle, 320 days, and 2.2-year cycle. These are good. If these show up as purple with purple dots, that means these are very high quality models that do a very good job of forecasting the market. And yeah, it's not a fluke. It's not because it's a long-term frequency and it tends to be good. Just throwing it out there. Short-term frequencies tend to be bad. Long-term frequencies tend to be good. But if you find something in the mid-range, 820, 320, 160, that is green or purple, that is the model finding a very solid way of forecasting that specific cycle. And there's likely a trading strategy built around that. And so, yeah, like I said, I've shown this before. This I may get rid of completely. This is the old forecasting model, which you can find on the Discord under the forecasts section. I only have it for Bitcoin. Here on this app, you can find it for every, or not every, but most tickers. Problem with this one, guys, is just it uses aspects only. So it uses aspects and it finds dates when there's a lot of aspects that have been found to be significant clustered together. Now, is that model useful? It can be. It can be used as a confirmation tool. I think I'm going to leave it here because those of you who are more like nuts and bolts and like to play around with this stuff, maybe you find it very useful. I haven't found it very useful personally since I launched the new version of the forecasting model, the new forecasting algorithm, which is what you see here. The orange line is a new forecasting algorithm. It's more math heavy. This one is very blunt. It just looks at past turning points, and it looks at what aspects were taking place at that time, and it just projects and just say, okay, here's a cluster. It clusters them together and it highlights the dates. Now this is above 1. So the colored line bars are higher than 1. You really should look for peaks like 3. These peaks here, they tend to be significant. It varies per asset though. Notice, for instance, here we have a cluster of readings at about, almost 3 for the Hang Seng index, and that does track with this 2.2-year cycle forecast expecting a high. So I would be pretty bearish. I would lean bearish on the Hang Seng index, and notice that the actual high did not come when the orange line expected it. It seems to have taken place around early January of 2026, which is when the aspects were taking place, right? So these models are based on orbits and movement of the planet. These are based on aspects, so specific configurations, which is the vast majority of astro traders use just the configurations, the aspects. These models don't use that. They just use the movement itself. Not pounding my chest or anything. I'm just saying these are different ways of forecasting. I like this the most because it gives me a frame of reference. Like, what is the market going to be doing? Even if the dates tend to be a bit more wrong, whereas the aspects model tends to be more on point and highlight specific dates. But the aspects model does not give you any context for the move, whereas the one based on the actual movement of the planets, yes, this gives you full context. It expects a high around this time and expects the low around this time. So it expects to top out around June of 25, and the low is going to be sometime in September of 26. It's much more precise. It really gives you resolution. And if I click on this, it's going to show the same thing once it's finished loading. By the way, those loading animations, I'm very proud of them. Uh, and I don't know what happened here because we can't see really up to date here with the Hang Seng Index, but notice that, for instance, we have another forecast on the next frequency turning point. We do have a forecast for September, a low in September also. I think the model is short the Hang Seng Index, and you can see why. It does expect a low in September. And looking at the aspects model for the 320 cycle, we can also see that there is a cluster of highs forming in January and the like. This model was likely inverted here, and I'm not even sure what to make of this turning point in May. I haven't looked at it. We can if you want. Just ask me a question. I could show the tour feature of the app. Perry, no, you can just click on that. I mean, I can show you where it is. You can click here on the question mark. It will show you a tour of the app, and you can just go through it. The problem, Perry, the reason I'm not highlighting it so much is because I built this as a placeholder because I'm still adding features to the app. So the tour of the app is not going to do a full tour of the app because some features did not exist when I created a tour. Now, this one hasn't changed so much, but it's going to explain what everything does. I think it still does a pretty decent job of what everything is. But to be honest, it is something that I want to work on very shortly here. I want to start working on this tour because I think most of you are going to find it useful, and I want to just update it and show you, the latest because it doesn't show the latest. I don't think the tour of the app even talks about this aspects model. I think it needs to explain the difference because Perry, that was part of your feedback. It's not at all clear what these bars are. It needs to be made clear. And I've been thinking of getting rid of them, but then, this is more for, it's called a cycle viewer. I think it's going to be called something like analyzer or market analyzer or something like that. It's for people who like to do their own research and their own analysis. And this model, I used this aspects model for many years, very successful calls to the day using this model. So should I get rid of it? Should I keep it? Probably going to keep it and see if somebody finds it useful. I haven't. But if somebody finds it useful, then it stays. If nobody ever uses it, then a future version of the app will not have this aspects model. And then the section that I'm most proud of is the trade viewer. And I think that's where most of you are going to find useful. This is the analyzer. All right, you don't understand anything about cycles? Fine, come to this section. This section trades. And it tells you how it's trading. It's a full track record of what it's done, color-coded. And notice that there are 4 colors because there's 4 types of trades. There are long trades and short trades. There are profitable trades and there are losing trades. And so they're all explained here. Profitable longs are green, losing longs are red, profitable shorts are purple, losing shorts are yellow. They're the trade markers. I think you can turn them on or off. I added some animations here, like this popping thing, because whatever. I just wanted to have some type of interactivity. And this is the treasury strategy. And notice that, so here you can follow these strategies. These features are not turned on yet. You cannot follow any of these strategies, but this is how you're going to be able to do it in the future. You just click on this button and you follow the strategy. Now, this is a real, this spider chart is built on real statistics, and the statistics it's built on are right here. And it's basically how often it trades. So it's number of trades, the win rates, how many of these are winners, total return in the full data set, total return in the recent half. Typically, I I slice the data and I backtest the full data and I backtest just the recent half and just want to see if the performance holds or it's just a fluke and it just happens to outperform because it did very well in the very early days, which will never come back. These are backtests. The reward to risk is interesting here because a lot of these Astro strategies, they risk about as much money, so they lose about as much money as they win when they win and lose. It's a coin toss. You win, you risk one to make one, but generally they make money a lot more often than they lose. And this is why they outperform, which is this chart right here. The blue line is the performance of the strategy, and the the gray line is just the performance of buy and hold. So this is what you would have made with buy and hold treasury since I think the 1980s. You would have made 1.81 times your money, and if you were trading the strategy, you would have 4.76 times your money. Not a lot. If you want to trade treasuries, you should probably use some leverage because it doesn't make a lot of money. And here's a full list of all the trades that it took. It's still a little. Sometimes it hangs because there's a lot of graphics to load. I still need to work on that. So performance issues, I'm well aware of those, although feel free to highlight them. And you can scroll through. There's a whole family of strategies. Some assets have more trades than others. Typically, there's two types of strategies. There's high frequency strategies. They trade very often. The trades don't tend to last very long, and it's just trying to scout the market. These tend to have high win rates and low reward to risk ratios. Treasuries, stock market, it leans on those types of trading strategies. Here you can see the type of model that it's using the best available model. It's called best override. Gotta change that because best underscore override looks filthy, whatever. And it's using forecasts. That's what F means. It uses the forecast for the 80-day cycle, and it's trading around the 20-day cycle. That's what these two things mean. If I go to Bitcoin, Bitcoin's main strategy, just to find that found most useful, very different. It doesn't trade so often. The win rate is 50-50, but the reward to risk is extremely high. It makes 7 times. It risks 1 to make 7. This is how you need to read this. It's a pretty good strategy. And it's kind of like in the low frequency trading family. So it doesn't trade that often, stays with the trade a lot longer. Some of these trades are actually quite long. You can see here, for instance, bought in July 2020, sold in April 2021. The trade lasted for 280 days. It's been doing that recently also. Bought in July 5, sold April 23. Again, 273 days. It really stays with the trend. Then it goes short, it goes long. This type of trading strategy is generally always on, unlike treasuries. You can see that treasuries, there's a lot of gray space. Gray means no position. If I go to Bitcoin, and these are all tested, there's like 2,000 different trading strategies per asset. I just select the ones that I think make the most sense. I do a walk forward with these, which means these are not just back tested strategies. They're not. I actually give the model for Bitcoin up until 2020 to make a forecast, and then it trades 2021. Then I go through 2021. It trades 2022. Then I go through 2022. It trades 23. So it's called a walk forward. It's not a back test. It is the proper way to test a strategy. What I was testing there is how stable are the strategies as I refine the forecast with new data that comes in every year. And the results are very good. They're going to be on the main page, on the landing page, because in many cases, the strategy is actually better than the back test when you update the model every year, which is quite shocking. And yes, I tested it throughout commodities, high frequency, low frequency, Bitcoin, stock market. And yes, this, which I call the V2 trading strategy, is very solid. I'm very proud of it. It's very solid. And notice that it's always on. So it's always with a position. Right now, you're not going to see up to date here, but right now the strategy is long. I bought recently. So it goes from long to flipping short. Then it goes back long again, flip short, back long, flip short. It's a very different flavor, all based on the same algorithms. But notice that in this case, we're using the 320 cycle, the forecast for that cycle, and we're trading around the 80-day cycle. This is, for those of you who follow me at Wise, this is like the closest thing to the Wise strategy that I used to have for the higher tier service. I changed it now to a very high frequency strategy, but this is how I used to trade. Around the 320 cycle, Sorry, using forecast for the 320 cycle around the 80-day cycle. Anyways, this section I believe is the most value for the app because it trades. Now, eventually, and there's some legalities that need to be not legalities, but you're gonna get email alerts for these initially, and probably an API connection. That is as far as I can go. I cannot actually do the trades for you. I can only say, hey, the model did this, and it's up to you to follow the strategy. Hang Seng Index, I can high frequency. It appears to be, yeah, it is high frequency. Again, if you follow the strategy, again, this is the highest value. It uses the forecast, it uses cycles, it uses an algorithm to optimize the trading strategies, and then it serves these trading strategies here, which you can follow. In the future, you're going to be able to follow them. Right now, you cannot. You can see what the strategies are doing in real time, but you're not going to get any type of alerts or anything. These are just information. This is not financial advice. It's just for you to follow as a reference. And I highly discourage you from following any of these. Why? Because they might change. I might change these strategies from one day to the next. And so I don't recommend that you follow any of these, at least not for now, until it's launched. And that's it. You have the monitoring dashboard, you have the cycle viewer, and then I think the most useful thing is this for most people. Actually, I'm curious to see what's going on with sugar because the model bought recently. Oh, so it was short up until May. It flipped long. This is a low frequency strategy, 76% win rate. Some of these strategies are pretty remarkable. Like it makes money most of the time. It doesn't trade that often, but it's always on. And it has a very decent win ratio. Commodities are very volatile, so max drawdown for the strategy is 54%, meaning you should never use leverage if you're following this strategy. I am currently doing a live test of these strategies, and the results will be published again in the app. But, you know, phase one is going to be published in December. I'm going to publish a full year of live testing when it's complete. And that's going to be July of next year. All right, so look for that access soon. You're going to have access. I need to reward the Discord. I'm going to try to get to that, do some of that work today, early next week. And so early next week, let's say middle of next week, you're going to be able to access the app. But please, just it is for feedback. It's not for you to come in here and say, oh, look, it's buy sugar. Let me buy sugar. No, these are all tests. All right. I cannot emphasize that enough. They're tests. And so you're there to test the app. If you want to use something, you can use the forecasts. These are not going to change. The forecasts are not going to change. So if you have your own trading strategy, you want to consult the app, what is it saying for trading sugar, and you want to see what the forecasts are for sugar, you can use that. Certainly. It's just information for you to make your own decision. And I recommend you use it that way. Now, I can see why it's long sugar. It's expecting a low on June 2nd. It's probably going to be long throughout the year. Interesting. And so, yeah, this section is the one that's finalized. There's not going to be a lot of change to the cycle viewer. The trade viewer, still under review. But feel free to come here. Feel free to look at the strategies, see what it did in the past. Many of these are experiments or tests. Gold long term, for some reason, wasn't even trading recently. I don't know why that is, but I found this to be useful. All right, so before I move on, let me see if you have any questions about this. What if the walk forward strategy didn't use the previous calendar year, but instead used the equivalent year of the previous cycle? For example, the strategy used right now for BTC would not be the previous calendar year, which were bullish gains, but instead used the previous equivalent year of bearish losses. I think what you're saying, Perry, is that you do the cutoff based on where the cycle ends. I don't think that's a good way to do it. Let me tell you why. Because I rerun the models once a year. On December 31st, I rerun the models. So the walk forward, what it's doing is simulating what I would do in real time. I would not rerun a forecast because Bitcoin made a low. I would only rerun it because it's been a year and I want to update the forecasts. Now, once the forecasts are updated, the trade section is not going to change, but the forecast section will change. I'm not going to have to develop that or write that until December, but yeah, know that the forecasts are updated every year, and this should not impact the trading results that you see here. This is going to be using the current version of the model at that time. So the back tests are going to show like the real model that was available at that time. Um, Comparing bear to bear and bull to bull. Instead use equivalent. I'm not. I don't exactly understand, Perry. Sorry. So yeah, do DM me about that. I don't understand. Sorry. Um, I do want to clarify that the reason you do a walk forward is you want to simulate the real environment you're going to be operating under. You're not going to be operating on a backtest environment where you know what happened. You're going to be operating on an uncertain environment where you don't know what happened. And you're going to be relying on a forecast that is attempting to predict the future, and you don't know the future. And so that's why you do the cutoff in the way that you do it. You just say, okay, I'm going to train this model up until this date, and I'm going to trade the following 12 months. Why the following 12 months? Because I only update the models once a year. I've thought about updating them maybe once every quarter, every 6 months, and seeing if that improves performance. It probably does. But at the same time, it might decide to close a trade mid trade because model change. So I want some stability there. I want those forecasts to live or be active for a 12-month period before the new set of forecasts come in. Now, the assets that have been around since the 1970s, the 80s, if you just add 1 year, the forecasts do not change. But for things like Bitcoin, and most of us here are focused on crypto, every year changes the forecast for Bitcoin. In fact, I'll share your story with you. If I only trade the models up until 2020, so price data for 2020, that means the model can only see it can only see through April of 2019. And at that point in time, there was no clear 320-day cycle. And so the forecast for the 320-day cycle is garbage. And performance breaks down. So it cannot trade using this 320-day cycle. And I did that because I discovered that, yes, you need a certain amount of data in order to have a proper forecast for a cycle that you can use for trading. If you just restrict the data too much, it won't be able to forecast it and it won't be able to trade. And so the walk forward for Bitcoin was doing great in 25, was doing great in 24, was doing great in 23, it did great in 22. Then when I added 21, which means I can only use price data through 2020, and because of how the algorithm for isolating frequencies works, that means I only have actual cycle data through April of 2019. And at that point in time, and I remember because in early 2019, Bitcoin's 320-day cycle was theoretical to me. I knew there was a 20-day cycle, I knew there was a 4-year cycle, and I knew there was an 80-day cycle. And so there had to be a 1 year, 11 month, 10 to 11 month, 1 year cycle. There had to be. So it was in that 320 range, and 320 is a Hurst frequency. So I speculated at the time that there might be a 320-day cycle in Bitcoin, but my algorithm can't really find it if I restrict the data through 2019. That cycle became very, very prominent in the 2021 run. And then in the recent bull market from 2022 through 25, it just formed. That cycle is finally there. And it's very predictable and it's very reliable. But it wasn't that way in the early days. So when the model broke down, I looked at why, and it's like, okay, that makes sense. There was no such thing as a 320-day cycle in 2019. It was just a theory. You could not really see it. All right, so that's enough for this. Let me move on to what everybody's here for, the market. We may come back to this if you want to see a forecast, what it's saying for this or that. But again, most of you are going to be able to see that for yourselves. I may reference the app because if you want to know what I think about gold, I'm just going to consult with my model. I have no other opinion. Just somebody there I need to admit. Don't worry if you missed part of this. The whole recording is going to be available on YouTube shortly. So moving on, I guess we've already looked at the cycle or the pure forecasting picture. Let's look at liquidity. And still to this date, guys, even though these planetary thingies, forecasting algorithms, they're quite remarkable. And they can be used for trading, as I just showed you, very successfully once you apply the right tools. And by the way, those strategies I showed you, it's forecast plus Hurst. That's it. They use VTLs, they use FLDs, they use filters to isolate cycles, and they use the forecast. That is all they use. They do not use any other secret sauce thing. You could recreate the strategies just looking at the cycle viewer and doing some work. You could come up with your own trading strategies that will be just as remarkable as the ones that I just showed you. Now, probably better actually, because you have a manual input. Remember, these trading strategies, they're just algorithms that find combinations and then I test them. If you know your stuff and you know your market and you know your cycle, your cycle work, you can probably do much better than that, than what I showed you on the app. So the cycle viewer, which is probably going to be the lowest tier subscription for the app because it's just information, no trading whatsoever. Um, I think many of you are going to find that extremely useful if you put in some work. Those strategies that I showed you are just what I came up with. Next week, there's going to be a different version of the strategies that do not use forecast. They use just Hurst. And the title of those strategies is going to be Hurst. So Hurst trading uses no forward-looking indicators other than FLDs and VTLs. Anyways, so Bitcoin, where is it? What's it doing? So it's following Japanese M2 to the letter. I think one of you actually texted me about this because you were fascinated by how close the correlation is. Yeah, it is. It is quite fascinating. In fact, I was writing an article for Wise the other day and I zoomed out on it, and I went through 2020 here. So through the start of so starting in late 2024 to the present, you could even see how it actually even predicts price to a certain extent. Like it is actually pretty close in terms not just of predicting the turning points, predicting the timing of these turning points, but actually the price. And it's not perfect. And don't criticize me for that because I've said many times. And I still get that criticism anyway. So I'll repeat it here again. These liquidity tools do not predict price. They do not predict price. Let me say that again. They do not predict price. Most people think it does because visually here you can see how it looks like it's predicting price. Let me zoom out. Oh, it's just not predicting price anymore, right? But when you zoom in, it gives you an idea. I'll admit to that. It gives you a sense of what it might do. Now I've seen some very reputable, and I'm not gonna name any names, and no, it's not Raul Pal, but I've seen some very reputable liquidity macro analysts use these tools for predicting price, and they get it wildly wrong. And they're judged for being extremely wrong because they said, oh, it's going to be trading for at 100,000 by, August 2nd. And they get that wrong. They get the move right, but they get the price wrong. And that's because it cannot predict price, which is quite shocking to me because let me explain to you how you do that if you know math. You just do a Granger causation test, and it's going to give you two numbers. It's going to give you correlation. Correlation is, are the turning points aligned? Are these two lines moving up and down together? That's going to be a number. It's going to give you another number. It's going to give you R2. R2 is how closely does it fit? They move together, fine, but do the two move in similar amounts? Or does one reliably predict the other in terms of the magnitude of the move? That's not exactly R2, but it's just so you understand. And R2 generally with these macro liquidity models is very low. It's like less than, it's 0.2, less than 0.2, actually it's 0.02. It does not predict price at all. If it predicts price, it's a coincidence. It's just not good at that. So drop the idea of using this to predict price. You cannot do that. You can use other tools to predict price. And I'm not good at that. I don't actually have any good tools to predict price other than just a sense of where resistance and support might be. That being said, yes, look at this chart, Japanese M2 and Bitcoin. It is close, right? But very off also. For instance, if Japanese M2 was able to predict price in 2024, Bitcoin would have rallied to 125 and it would have made a low at 63. Instead, the high was just under 110 and the low was 80, I think. Well, it's 85, 75. So yeah, Japanese into kind of gives you a notion of what it's gonna do, but it's not perfect, and you should not use it like that. So you zoom in, and notice that always the chart, the scales are always changing as you zoom in, zoom out. The scales always change. What doesn't change is the timing. The timing of the highs and the lows never changes. The price scales change all the time. Now, Gann, and I'm not a Gann expert, but Gann had this thing what he called a squaring the chart. And what he would do is he would try to find a good how you should scale certain indicators like planetary movement and what have you. He would try to scale them in such a way that you could predict price and time. I've never delved into that world. I'm an algo guy. I'm a quant. So if I can't write an algorithm to do it automatically for 1,000 things, I'm not even going to bother with that. I could try and find the right scale between JPM2 or some other line and Bitcoin, but can I do it quickly across 1,000 assets? If I can't, then I don't bother with that. I just design algos. I think that's where the edge is. That's where the power is. Create algorithms, run the algorithms. That's what I do. And so fast forward to the present, and it's just doing exactly what Japanese M2 is. Even this little sell-off here was predicted by Japanese M2. We have this rally here that was kind of, it looked like Bitcoin was moving ahead of JPM2, and then it started dipping. And it probably dips into this weekend, somewhere around July 22nd. And from that July 22nd low, it will spike higher again. That's what it'll probably do. Uh, I'm not looking at a crystal ball. I'm literally just looking at the price of the yen and moving it forward by 84 days. Now, is this indicator always going to work? I think not. And the reason I think it's not going to always work like this is because it's so easy. I mean, it's so easy. It's been doing this for years, Bitcoin. Now, you do need a sense of technical analysis, cycles, and the like to predict certain moves. For instance, notice that this sell-off here in Japanese M2, this is like the master class or a quick crash course on how to use a liquidity tool. Because notice that these sell-offs in Japanese M2, they're all the same. They're all the same magnitude, right? Same duration, roughly the same magnitude. They're all roughly the same, right? And yet this one, the third one, let me move this one to the front. This is the only one that really translated into a serious Bitcoin correction. These two, not really. Especially this one. This one, so we had a top in JPM2 in late March with the low in late September. That roughly tracks with what Bitcoin did. It went down between these two time periods, but it didn't go down nearly as much as Japanese M2 was suggesting. Japanese M2 was crashing at this time. Bitcoin was just going sideways. It topped out at 73, bottomed at 50. Not a serious correction. It lasted as long as Japanese M2 suggested, but it didn't go down as much as Japanese M2 suggested by design, because Japanese M2 doesn't tell you that. What can give you a sense of what the price is going to do is just pure cycle analysis. And the way I predict, or the way we could tell that this was serious, this correction, this Q1 correction in 26 was serious, versus the Q1 correction of 25 and the Q2 through Q3 correction of 24 is cycles. And very, very simple cycle analysis too. It's not even complicated stuff. I'm going to show you how you can do that. It's very simple. So the trend is bullish here, and I'm gonna unpack that in a minute. But the trend is bullish in 24. The trend is bullish so far still in the early days, the early months of 2025. What I mean by that, I mean that the 320-day cycle is bullish. And how do I track that? Just watch the YouTube lessons, but I have it right here. Let me put up this filter. Come on. There we go. So this is an FLD. I'm going to turn that into a filter. So this black line is isolating. By the way, those of you who have access to the app, we have a much cleaner yellow line that isolates the cycle, and it's in real time. It attempts to be real time, actually. It's an extrapolation, but you get in real time. But if you don't have access to the app, the 320-day cycle, just watch the YouTube lessons. You split that frequency by 4. So 320 divided by 4 is 80. That is your filter duration. You move that backwards by 40 days, half of the length. That's called a centered moving average. You put up that center moving average and boom, it highlights the 320 cycle for you. That's it. You can see it. Now this cycle, starting in 2022 right here, is bullish. If you have questions about this, please ask. This is what the AMAs are for. Show you how to do it without any fancy tools. So again, my app can do this in a very fancy way. You don't need any fancy tools. You can do it with a TradingView connection or just anything that has moving averages in it. Split the frequency by 4, gives you the isolated 320-day cycle view. And that's it. We have all of the lows for the 320-day cycle. And this is a very, this is also a Gann technique called the swing chart. And again, if you're a Gann expert and I'm butchering this concept, apologies. But what I understand for a swing chart is just look at, isolate the cycle. This is not Gann, really. Gann would not do this type of isolation, I don't think. But you can see when a cycle is doing higher highs and higher lows, the trend is bullish. Higher highs and higher lows. You can clearly see it. I don't need to highlight all of them because the black line is doing it for me. So the filter is bullish. The 320-day cycle is bullish. That means Bitcoin's trend is bullish. And when Bitcoin's trend is bullish, corrections on this 320-day cycle tend to be mild. They used to be about 50%. Nowadays, it's about 20 to 30%. So the cycle, the amplitude of that correction, the amplitude of that cycle has shrunk considerably. Bitcoin used to go up 5x during a 320-day cycle rally, and it was correcting about 50% of that during the 320-day cycle correction. That has changed completely now. Bitcoin about doubles on a 320-day cycle rally, goes up about 100, 150%. And then it goes down about 20 to 30% during the 320-day cycle correction. But as long as that is bullish, as long as that cycle is bullish, any correction on Japanese M2, any correction, any sell-off predicted by Japanese M2 will be mild. Any rally predicted by Japanese M2 will probably rally past the last high, and it will be strong, about 100%. Let me show you the 2024 example. We have, let me delete all these arrows, and this is how you can read this in 24, and you can still do that today. So we have the black line that is showing us what the 320 is doing. And we have this very severe Japanese M2 correction. But since the 320 is bullish, what this is highlighting is not a severe crash. What this is telling us is that the 320 is about to enter correction mode. But we know from cycle analysis, so we're combining Japanese M2 with cycles, we know from cycle analysis that this is probably a 20 to 30% correction. It's not going to be 50%. It's not going to be any of that. It's a 20 to 30% correction during this time. So between March and September. And that's exactly what happened. Then Japanese M2 rallies. But notice that the actual rally that Japanese liquidity does is just basically a retest of the old high, right? So this high is just kind of a retest of the old high. We ignore that because JPM2 doesn't predict price. The cycle picture is bullish. We know that. And if the cycle picture is bullish and Japanese liquidity predicts a rally, prices will likely double. Why? Because the 320 just about goes up by about 100% when the cycle is bullish. This cycle was bullish. It bottomed at about 50K or 55, and it rallied all the way up to about 110. So it doubled, just about doubled. But we knew it was going to double, and just like we knew that it was going to go down by 20 to 30%, not by looking at Japanese M2. That doesn't give us any information about price, but cycles do. And if cycles are bullish, then you're in this framework of a 20% correction, 100% rally. But look what happens in late 2025. So again, I'm not going to explain all of these concepts. Just watch the YouTube lessons. But we can draw the 320-day cycle VTL. And what this is just drawing a line connecting the last two lows. Crossing that line highlights that a big turning point has taken place, a big high has taken place. So we're going to paint this. I usually paint these orange. So we'll paint this orange, and we already have the forecast here in late 2020. So let's go to October 25. We connect the last two in October 25. The last two 320 lows were the one in April, April 7, and the actual one is in August 5, but we cannot really draw a line through that without cutting through price. So we use the retest here on September 6. Again, I explain all of this in lesson 3 on YouTube. It's free. So watch that if you want to know how these tools work. Let me delete this for a second. We don't need that for now. Oh, I think it won't let me delete this. Oh, yes, remove it. So we connect these last 320-day cycle lows. That's a 320-day cycle low VTL. Why low VTL? I don't think this is a Hurst term, by the way. I differentiate them like that. It's a low VTL and a high VTL. Reason for that is when you're writing code, you have to distinguish between them. The code is different between these two. And also the low VTL is for spotting highs and the high VTL is for spotting lows. So because the cycles are bullish, we care about highs in 2025. We want to see where the next high is. Now, the strict definition of a crossing over of a 320 VTL is that the 4-year cycle has stopped out. The 4-year cycle, the next cycle in line. So Bitcoin has a 320-day cycle, and the next cycle in line is the 4-year cycle that everybody knows. And so by drawing this 320 VTL, we can tell when the line is crossed, when the 4-year cycle high has taken place. And those of you who follow me on Wise, you know, we liquidated almost everything in November, whatever we had left, because in February of 25, we had these VTL crossovers for most altcoins. And then Bitcoin and a bunch of other altcoins, the lagger, the ones that were still somewhat strong, they crossed in November. And that was an oh shit moment for me. I was like, okay, we need to sell everything because a big sell-off is coming. And then we tried to buy again, and that was a disaster because I tried to use liquidity for that purchase, ignoring the cycle picture. So just wanted to have activity for people, and that backfired massively. But we did sell at the May top, so we did okay. Anyways, so back to the cycle analysis, pure cycle analysis. We have the 320 VTL, low VTL. Strict definition of this crossing over is 4-year cycle has taken place, 4-year cycle high. Now, how you find the actual high is you just go back to the recent high that was formed. So we cross the VTL on November 14. What is the last highest high we have had since crossing this VTL? Well, it's the October 6 top. So November 14, about a month after the 4-year high, the October 6 high is made, a pure Hurst analyst will say, well, the 4-year cycle is in. And that's pretty remarkable because the top is 125 and Bitcoin is still roughly at about 100K. It's just slightly below 100K. And you already know you're in a bear market. And you know where I'm going with this. So this next, once you cross over this line, and by the way, and Perry, I've said this to you a lot, getting close to these VTLs is just as good as crossing them. So I was already worried and I was already liquidating around early November because we were testing the VTL and just getting close to the VTL. If you get close to a VTL, you usually cross it over within a few days or a few weeks. It's just as bad. This is something that I've learned. In fact, in a future version of my model may actually incorporate this concept because getting close to a VTL is just as bad in this case because it's bearish. It's just as bad as actually crossing below it. And something happened here on November 4, which was that we had this 80-day cycle low. We had a retest of this 80-day cycle low here mid-October, but prices did manage to rally above. But then on November 4, we're not only crossing below the last 80-day cycle low, which in and of itself, for Bitcoin specifically, is a bearish signal. Not only that, but we also have, as we cross over below this red line, like convincingly on November 4, as we're crossing below that, we're also getting close to the 320 low VTL. Super bearish. And so we had to sell everything. Which sometimes subscribers don't love, but I gotta do what I think is right. And selling everything was the right call. And so this next forecast for a low Oh, sorry. This next forecast for a low, for a correction, sorry, that we already knew. We already had this from Japanese M2. We were aware of this correction already. But the fact that the cycle picture is turning bearish tells us that this is not going to be a 20% correction, 20 to 30. No, this is going to be at least 50%. We're entering a bear market. And so now every one of these sell-offs is going to be quite severe, and every one of these rallies is going to be quite muted. And that will continue to be the case until we cross the high VTL, which we might do soon. So that's kind of bullish. I've been writing about this at Wise. How can you follow me at Wise? It's actually Wise Ratings. Let me type it here. WiseRatings.com. There are free articles there, pretty good. If you're on the Discord, the free articles plus a Discord is all you need, really. But if you want to subscribe to follow the actual trading strategies, you can do that also. Really, the only reason you would want to do that if you're on this Discord is you want the trading algorithms, which are very good, but they're very active. And so I'm actually working on communicating how good these are because it trades actively, but promise these are very good algorithms that you can get only at Wise. So the crypto algos are only at Wise. Anyways, they don't follow any of this stuff, by the way. They're very short term. It's like a 5-day cycle combined with a 20-day cycle. And it's in and out, in and out, in and out. But they're long only strats, so they haven't really done much in this year. We've had some winners, but it's been mostly flat, which is what you expect in a bear market anyways. You don't want to, you're trying to preserve capital. If you have a long only crypto strategy during a bear market year, you just want to preserve capital. That's what you want. You don't want to make money. You're not trying to double, triple your money. You're trying to preserve capital so that when the next bull market comes in, you're trying to outperform the market. You're trying to beat the market. You're trying to make as much money as possible. That's how these algorithms work. So they're like capital preservation mode. I don't think they've traded in about a month or so. There's been very few trades recently, but this is because Bitcoin topped out. Bitcoin and crypto topped out in May, and they've been down since. So no activity. Works as intended. That's how these strategies are intended to work. Preserve capital during the downturns, make as much money as possible during the upturns. And I've been testing them for about 500 days or so, and they have preserved capital. I can tell you that much. Problem is, if you go back 500 days, this is roughly here. This is when I launched the vaults, right around the top of the market. So there have not been opportunities to really make money, unfortunately. However, anybody who's been trading for some time, you would know the most important thing is preserve capital. Money comes in. Making money is easy. Just put the trade on and you make money. Knowing when to exit for a loss, minimizing losses, that's the trick. That's the difficult part. And I think these algorithms nail that. And it's very simple. So proud of that too. Anyways, back to cycle analysis. We have these two 320-day cycle tops. This is not going to show up on the app because this is not really confirmed. This May top is not confirmed as a 320 top. So I'm just extrapolating. But I believe this is probably eventually going to be confirmed as a 320 top, but I am extrapolating. Sometimes the way I do this is I paint these, I do a dashed line. So this is color coding for not really confirmed as a top, but eventually, unless Bitcoin can rally way above this May top, which is not going to happen, then this will be confirmed as a 320 top. So we can use it. We can use this line. And crossing above this line is the opposite of crossing below the orange line, which I have to redraw. It's the opposite of this, right? Whereas crossing below this line, this orange line, was bearish, highlighting that a bear market is starting. And therefore, any liquidity forecast for a correction should be taken very seriously because we're not in the 20 to 30% realm anymore. We're in the 50 to 70% realm for the correct. So we pay attention to the corrections when we're below this line. But when we cross above this line, if and when, and I believe it might happen within just a few weeks, because that's what Japanese M2 is saying, and this is the big headline for this month, is we're close to closing above this line. Now, we're not so close that I would say, yeah, we're close enough that we're gonna we're going to cross above at some point anyways. We're not quite there yet, but if we cross above this line, then we flip the bearish out. Now we're bullish. Now the 4-year cycle low has taken place, and the low will have been right around here, June 29th through July 1st, right around when Japanese M2 said the low would be, right around when my own forecasting model said that the low would be. We cross above this line, and we pay more attention to the rallies in Japanese M2 than the corrections. Now the big rallies will translate into a big Bitcoin rally, and the big sell-offs in Japanese M2 will not really translate into very serious corrections because we flipped the cycle. The 4-year cycle low has taken place. We expect a bullish uptrend, and we're bullish again. We can actually deploy capital after the correction is over. Now, we still need Japanese M2 to rally. We don't have that yet. Japanese M2 has been on a pretty serious decline lately. The decline starts once we apply the offset, which is about 84 days. Once you apply the offset, late July, early August is when the high is expected. And then it's going to correct for about 2 months. And unless we see Japanese M2 rally, there is no trade, at least as far as I'm concerned, unless you want to short, of course. If you want to short the market, all power to you. But there's no long trade, and there's really none of those trades where you're just going to make 2 or 3x on Bitcoin or either deploy capital for the next bull market or any of that. We need Japanese M2 to turn higher. However, the first of the two, which is that the cycle picture turns bullish, that could happen soon. Could. It hasn't happened yet. And like I said, I don't think Bitcoin is close enough to this green line to take that crossover for granted, to say, oh, it's just a matter of time. It may not cross above. That's what I'm trying to say. It may be that Bitcoin just tests the line and it doesn't cross above. That will be quite bearish, because what that means, if we don't cross the line, I have to be completely honest here. If we do not cross the line by early August, we're still at under 66K, 65K, 67K, then we're probably going to make new lows. As we head into October, we're headed for 50K. So we need to cross the line. It's very important. For those of you who are waiting for the bull market or waiting for Bitcoin prices to stabilize. If it doesn't cross the line, and it is my base case, I do believe that this rally has been highlighted by Japanese liquidity all along. It started a few days later. It's fully underway now. And the best part is still to come. So the best part is the last few days of July. We're right there. So the best part of this rally should be starting soon. And I believe it will be enough to take prices across the green line. But there is a possibility we do not cross the line. If it doesn't cross the line, expect new lows as we head into October. That will be the outlook. Just combining Japanese liquidity with the cycle picture. You cannot use either or. You have to use both. If you're aware of cycles and you're aware of Japanese liquidity, then you can make the most of this market. And so watch this green line, because it's all about whether or not it's crossing above. It's very different to say that Bitcoin is just staging a dead cat bounce here, which is all this would be. That would be quite bearish. It means new lows as we head into October. Whereas if we cross above the line, then we're in a range. We're just in a range. We're going to go down into October again, but it's going to be about 60K. That is my base case. Now, it's not necessarily because I'm seeing something here in price that makes me bullish. It's not really that. It's the fact that the forecasting models are predicting a low between, like I just showed you, between July and August. So really July is, because the 80-day is June 29. We already have that, by the way. It's already confirmed. It worked again. So June 29 is exactly when we have the last 80-day cycle low. This is already an 80-day cycle low. But the forecasting model also says that early August has a wide margin of error. It says that early August should be a 320 low too, which means that this low should also be a 320 low. And if it is, then Bitcoin should rally past this line. And if it does, then 60K is as low as Bitcoin goes. You see how I know that I'm going fast. I've been doing this for a while, but that's how the logic chain goes. We confirmed the 80-day cycle low. We confirmed the 320 low. We crossed the line. That gives us a floor for prices, and we're just trading in a range. All right, gonna move on to the actual question AMA section of this presentation. I think I've been doing this for what, an hour? All right, that was longer than usual. Let me get some water and I'll get to your questions. Perry, you're asking free access for Wise or the paid subscription. Um, you can use either or. So the if you get the free access, which means you just give Wise your email, you get bi-weekly issues that I write for them. And the ones that come out on Friday, they're the ones who update the cycle picture. But for free users, so it's not doesn't have any trading, doesn't have full context on all the detail. But I'm telling you, that piece that comes out on Fridays, I don't think people know this, but it's the cycle picture. It's an update of what cycles are doing, and it's for free. If you pay for a subscription, what you really want is trading. You want trading alerts. That's really what you're paying for. And so, yeah, if you just want to keep up with the cycle stuff, just the free subscription at Wise is enough. If you want to really take advantage of the algorithms that I have and everything, then it's the paid subscription. The monthly newsletter has a very good strategy, but it is a very long-term strategy, meaning that so far in 2026, it has only bought things. It started to buy things, and it will start to sell them in 27, 28, 29. And users are not happy, of course, because it's just buying, it's not doing anything. And as prices come down, it buys more and more. So that's what it's designed to do. I can tell you it's a very good strategy. The one that is a premium subscription trades very actively. It trades in and out. It trades these types of moves. And so you can at least make some money during bear markets. With the monthly subscription, no, you're not going to make money in a bear market. You're just going to accumulate if you stick with it. Many people don't. But I can promise you that anything that's at Wise is as good as what you're going to get here or in the app that I'm building. It's all back tested, fully forward tested trading algorithms, and they all work. If it's on a service, it's because I've tested it, I've traded it myself, and it works. If not, I would not be giving it to you. I can promise you that. In fact, I don't currently run the monthly subscription trading strategy, but I was preparing some reports for the marketing team, and that strategy is actually pretty good. It's pretty good. I'm thinking of running it myself, but it's very long term. But so it's kind of like a cycle goes down, a 4-year cycle that is. You start buying, dollar cost averaging, 4-year cycle turns up, you start selling. And it works. You do that across cycles and it works. It beats the market. So it's kind of a dollar cost averaging type approach. So the crossing of the high VTL already happened on ETH. So Perry, let's do that. Let's go to ETH. Let's see. Let's look at that because I haven't looked at it. The problem with ETH is that this is not a 320 high. I don't think. Let me check. Let me check real quick. I could check. I could download the report from the cloud, but I think it's going to be faster if I just do it this way. How many days? I think I wait. Actually, this might be a crossover. I need to check actually. I think it's divided by 4. Yeah, it's 80. So it's not a 320 top. This is not a 320 top on ETH. So, which means, it is an 80-day cycle top. So what we have, Perry, is something that might be similar to it. And I was actually going to comment on this on the Discord yesterday. It might be the same, but it's not exactly the same. What we have is a Double VTL. Remember that Double VTL that I like to do? I'll explain what that is. We have, so this is not, I'm pretty sure this is not a 320 top on ETH. The reason for that is this rally is not enough to say this is likely a 320-day cycle top. It's just not enough. It is enough on Bitcoin. It was a strong enough rally in terms of price and time that this is not confirmed yet, but it's very likely to be a 320-day cycle top. But for ETH, it's just not. But it is an 80-day top, 100%. And this is an 80-day top too that took place in late January. And this is another 80-day top that took place in actually the actual high on ETH is August, but again, VTL drawing rules. We'll put the VTL, the start on October 6th. We have these three tops from which we can draw two lines because we need two tops to draw each line. And we have crossed the first one of these. So the first one of these was already crossed. You can see how that doesn't mean anything in Bitcoin or crypto. Ethereum crossed above this 80-day cycle VTL in early April. It meant nothing. That's why I don't use those. But crossing two consecutive lines tends to be more meaty. It tends to be more meaningful. Now, I have tested this on crypto, this double VTL rule on the 80-day cycle. It doesn't, it's hit and miss. It's hit and miss. It's not like if it crosses the 320, you have a 4-year cycle low. If you cross two consecutive 80-day cycle VTLs, it's kind of like, let's say it's like 70% of a 320 VTL crossover. It's not quite the same. It doesn't carry the same weight, but it is significant. It is significant nonetheless, especially if other crypto assets have done the same, and I believe Solana may have done the same also. So this absolutely 100% Perry. This could be an early warning or an early indicator that yeah, we do have a 4-year cycle low in June. I really want to see Bitcoin cross its line though, because the cycle picture in Bitcoin is clean. It's clear that May, this thing here, May is a 320 top. It's very clear. So we can clearly draw the line, and we can clearly say if it crosses the line that the 4-year low is made. But in the case of ETH, first of all, you do not connect these two highs, the one in May with the one in October, because you're skipping one 80-day cycle. So you can't do that unless you confirm that this is a 320 top. And like I said, I'm pretty sure it isn't. I think the rules that I have is a quarter cycle. So quarter cycle for the 320 is 80 days, which means that this black line needs to be the highest point within an 80-day window. And notice that if I count the days backwards from the high, which is somewhere in here, if I count the days backward, it is the highest high in a 50-day window. That's not enough. It needs another 30 days. So it's not a 320 top. It will not be a 320 top. So it's a double VTL crossover on an 80-day cycle, which again, it's like 70% of a 320 VTL crossover, but it's not the big one. It's not the big one, but it is significant. It is. Especially more altcoins are doing it. And I think, let's look at Solana. I think Solana may be doing this. Solana may actually be more bullish. Let's see. Or maybe not. Let's see. So we have the first one. Obviously, it didn't mean anything. That's why you never heard me talk about these. During a bear market, these 80-day VTLs don't mean anything. In a bull market, they do. In a bear market, they don't mean anything. And we're in a bear market, so they don't mean anything. Now, but we do have the same crossover on Solana. So yeah, this could be it. This could be an early warning. Because, I mean, one doesn't mean anything. Two consecutive ones, you start to pay attention. Not BNB. What's another market leader we can say, we can point to? Nah, not really. We don't have any more market leaders. Crypto's it's a very small universe now. We have these three: Bitcoin, ETH, Solana. And yeah, it is quite remarkable that Solana and ETH have already done this double VTL thing. It's interesting. And Perry says, moving on, Perry says BTC. Yeah,
You do eat again, like, can
sure.
you just double BTL? Oh, so it's crossing now, right?
ETH has crossed. Let me zoom in. Yeah, it crossed. This will be the fourth consecutive crossover. This is good. This is a crossover. It
Hmm.
crossed. Definitely. Doesn't mean as much. In fact, let's look into it because I think it did the same thing in 2018 and it didn't mean much. Let's see, this is 21. No. Um,
To see if the correction in ETH is done, because even though looking at like if you look at ETH and BTC pair, actually, ETH is
yeah.
pretty strong on that one too.
Let's look at that next then. Yeah, I mean, look, this is the 18 bear market, and you can see the first crossover doesn't mean anything. I've looked at this when I created the cycle model. I looked at what should be considered a bullish signal for crypto once it's in a bear market, and I believe I discarded this double VTL thing. But let's see. So let's bring it up. Let's bring up the indicator because I don't wanna mess this up. Oh, sorry, this is 10 days. All right. So we hide the 320 and we bring up the 80. This is not an 80 high. And yeah, so the last one, I think the double VTL did trigger here, did highlight the low. This is 2018, and we have so just so we're clear, the three highs are the one in January 18, this one in May 18, and then there was another one right here, September, but we can't draw the line through that high. So we draw it here. And yeah, double VTL rule, bear market bottom right there, highlighted. So it worked. It worked in 2018. I think, let's see if it worked in 2022. We do not have any more bear markets on Ethereum. So we have 18 and we have 22. So 22 it didn't because we have unfortunately this 80-day cycle top. But let's just bend the rules a little bit. And let's use the all-time high. We skip this one. We're going to skip it. Ah, that doesn't look good at all. We're just going to skip this one. We're not going to use this one. This is a weird pattern. I don't like it. I don't know if it is a 20-day top. Let me see. It needs 20 days. So let's see. Yeah, it's a 20-day top, 80-day top. But well, we're going to ignore it because we can't do that. Because these are waves. You can study the wave. You bend the rules a little bit. Um, this is not officially part of any model that I have, just so you know. I'm more with models. With modeling, you have to be more strict. So this is if you're skipping a cycle, it's because you're just trying to draw conclusions. You're skipping this. It didn't work. But well, actually, you know what? Let's not do that. Let's not bend the rules. Let's take these three. So we have this one crossed over somewhere in there, and we draw the second one, and it's crossed over somewhere in there. And this happened after the low was made, right there. So this didn't highlight that a low was incoming. This told you the low was already in. So yeah, it could be interesting. Solana already has one bear market. Let's see how it did. The beautiful thing with Solana is we do not have this stupid February 22 80-day top. So we can go straight
But isn't it with
to
Juan, with Solana, it's going to be much harder because we had a FTX collapse. And literally, like that time, it went to like $8 or something. Like FTX was a big thing. And they were
true.
the main supporter of Solana. So even the asset was linked to FTX.
No, but look, I mean, it's kind of so it's a little weird because Solana has this 80-day top, and yet by the time you confirm it, I guess I mean there's two versions of this VTL. You could go there. I actually don't draw VTLs this way. I actually in the last AMA I showed that this would be my model would not have a VTL connecting these two tops. It wouldn't have it. That's the cleanest way to do it. The reason why is if you draw the VTL, it's too close to price action. And what I've learned is that you want these lines when you draw them, you want prices to be kind of far away from them. Like here's very clean. Once you draw this VTL, you can draw it somewhere in here. And prices are trending lower. This is a good line. If you draw a line that kind of hugs price as you're drawing the line, of course you're going to cross above it. So you tend to rule those out, and then you draw it on the next stop. So it's kind of there. The VTLs are just kind of a nightmarish. But this is, we could say, I go from 70 to 80%. Because this line, you shouldn't really draw this line. But if you do, and you have these three tops, kind of what we have today. Yeah, it did highlight the low pretty well. You have three consecutive highs, two consecutive ETLs, but yeah, it's not a clean picture. It's not a clean picture with Solana, so it's just not clean. With ETH though, it is clean, and it did happen. Sorry. We go back, and the two consecutive ETLs that were crossed were these three, because we have a fourth one here, and its VTL is there. That one's never crossed, so we don't use this one. We use this one. And I actually want to do a trading strategy. I want to. That just reminded me that I want to do that. I want to have a new family of trading strategies that actually do look at these more complex patterns, not just whether it's one VTL crossover, but whether multiple consecutive ones were crossed. So I'll be launching those strategies within the next few weeks, because it's something I'm looking into. These complex patterns. I need my model to be aware that these patterns are taking place. Right now, it's not. But once it is, I can probably do some pretty interesting trading strategies and properly test this pattern. But I would say that, yeah, it is interesting. Two consecutive ETLs in a bear market, it may be just as good as a 320. It may be. I wish the pattern was cleaner, and I wish I had more test cases, or, test cases. Because right now we have very few. Solana didn't even exist in the last bear market. What is this? Oh, it's this ETH. So an ETH definitely worked. Double VTL highlighted the low almost to the day. It's pretty remarkable. And 2022, it did so too. I like this because this is very clean, it's very honest. This is three consecutive tops, two consecutive VTL crossovers. And by the time it did confirm that the bear market was over. And keep in mind, Bitcoin was making new lows in November. But if we have ETH pretty much confirming this June bear market low with this pattern, then we can say in January 23, Bitcoin has definitely made its low. If we validate this pattern, which I have not yet, but it's a very interesting thing to explore. And it just reminded me that I've been meaning to do that. Like make the model aware of these. It's just counting how many consecutive VTL and FLD crossovers you have and designing strategies around that. So that's interesting. That's very interesting. And we have the same pattern now. It could mean something. It could mean nothing. I think that if we bring in, I think this is the wrong one. Yeah, this is the wrong one. I think if we bring in Japanese M2, which is telling us that there should be a bit more of a rally now, then yeah, this pattern might hold. And notice that in the two examples on ETH, these crossovers tend to happen very close to the actual low. It's a very early indicator, which I find quite remarkable. So yeah, if it's, I would say this needs more testing, but there seems to be something to it. And if there is, yeah, this is it. That's the low. The low is made. I would still like to see Bitcoin. If Bitcoin does the same, then we already have this validation from Solana, from ETH. Bitcoin does the same thing with a proper pattern that I have tested. And yeah, that's it. That's a 4-year cycle low. We're close. We just need, you should project this rally. And you know what? I have more time here. I tried to do that at the Wise video yesterday, but those are fast and I couldn't do it. but let me do it now. Let me find where this thing is. There's this regression channel that Raul Pal loves. Oh, there we go. So we project. There we go. And then we just project it forward. So it's just assuming Bitcoin maintains its current momentum. We should expect it to cross over around July 28th at 67. That's if it keeps up the current momentum. So let's just start from the actual, because I think momentum is a little stronger than that. Nah, it's roughly the same. So yeah, we just project this forward. It's roughly, by July 29, it should be trading for 67-ish. It's gonna be close. But I believe that by early August, late July, may have Bitcoin at 67, 68, and that's just good enough. And then it doesn't have to rally a lot higher than that. What it does need to do is need to stay there. So let's say it goes to 68, which is not much, but it stays up there. Right? It doesn't cross right back below it, which would be very unlikely. If it stays on the other side of that line, that's it. That's a pattern. That's a confirmed crossover. What you don't want to see, which might negate the pattern, is it crosses for like a day or two, and then it goes right back below, and it never goes back above. You don't want to see that. It's just 1 or 2 days is not enough to say, oh yeah, that's a 4-year cycle low. But based on the pattern, based on liquidity, based on the trajectory of the move, it looks like it might go to 68 by early August, which again is not much. I'm probably going to short some calls at that point. But then it looks to me like it just stays above. And so the line just goes straight down into 60K by early September. And this thing is probably going to go 60K by late September. Meaning once it crosses above, it stays above. And that's what you want to see. You don't want to see prices rally way past the line. No, you just want it to stay above the line. Once it stays above the line, that's it. Crossover confirmed. Even if it's actually going down. So all we need is to go to 68 by early August, and then it needs to go down slower than the line requires. So this line requires that Bitcoin drops by, I don't know, 500 points a day. So as long as it's not doing that, crossover confirmed, 60K is the low, the pattern is validated from Solana and ETH, and we can all celebrate. Now, it's just, we need to wait for liquidity to rally. That's what I'm waiting for. I'm not going to touch this thing until liquidity turns higher. If it doesn't turn higher, then sure, we have the low, but there's no rally. No rally in sight. So it's good if you're long-term minded. It's like, okay, I mean, I'm done. That's it. We have a floor. We have a price floor, but we do not have the rally yet. You're not going to make money from a price floor. You're going to make money from the rally. So Barry saying maybe the alts lead Bitcoin and the bull market start. I would be skeptical of that. Keep in mind that the alts are, yeah, sure, the pattern is kind of more bullish, but they're trading below support. They're trading below the February lows, whereas Bitcoin is trading above the February lows. So I would say Bitcoin, maybe from an absolute return point of view, the alts are doing better than Bitcoin, but the pattern is going to look more bullish, I think, for Bitcoin. If this is confirmed, let's say this is a 4-year cycle low, what I would expect the alts to do is just retest, right? Because it is a 4-year cycle low. So I would expect ETH to go to like 2,000 and then back down to 1,500 and not make new lows. That's what these things mean, by the way. I don't know if that's clear. I don't think it is. When I say, oh, the 4-year cycle low is in, that doesn't mean the market turns around, begins to rally every month. No, it means it doesn't make new lows. Whereas the rally proper, the timing or the start of the next leg higher, we're gonna need to use Japanese liquidity for that. That's gonna tell us when that happens. What cycles will tell us is what the price floor is. Interestingly, cycles in this case, we're gonna use them for price to tell what prices should do or should not do. But we cannot rely on them for timing because this liquidity thing is much better for timing. All right, so I wonder if meme coins and total scam shitcoins will play a role ever again, other than being retail money vacuum cleaner extract. I don't think so. I think alts are mostly done. I don't think we're gonna have meme coin season again. I don't think we're gonna have the likes of Arbitrum, the governance token. Governance for what? Nobody knows. Um, or the likes of CRV, which is like super high dilution type uh shit coins that just don't do anything. I think those are done. I've seen some of them being delisted. Like look at Rune. I mean, what happened to this one? This one used to be one of the best performing altcoins. It's still around, I hope. I don't know why it's. Oh, there we go. So we still have it. I just need to update it. But look at this. This is total shit. Look at this. This is a shame. This is embarrassing. If you launch this thing, you should be embarrassed. I mean, you talk about destroying value. It topped at 10 and notice lower highs, lower lows on a long-term basis. This thing's totally done. You can still trade them and make a lot of money if you know how to trade them because they're super volatile. But what an embarrassment. Like, look at this. Tops in 21, makes a lower high in 24, makes a lower high later in 24, not even a rally in 25, and then it just goes to zero. Now, they can't go to exactly zero because that's how the math works for crypto assets. But yeah, these are like what? A governance token? This was to be like a liquidity type token thing for Rune, which is a great decentralized exchange. I think it's still around. It's for non-custodial cross-chain swaps. So very good app, very shitty token. This one is the one that I'm keeping an eye on Pendle because since they changed the tokenomics, it's actually making higher highs and higher lows. So it's volatile, but it's not crashing because they have this. The revenue that Pendle pays now comes directly from the revenue collected from the Pendle app. Um, I expect to answer your question more in a more sophisticated way, Perry. I think that a lot of these altcoins are going to change their tokenomics so that the return they pay, so the yield they pay, is actually tied to the app through buyback programs. I think buybacks is the legally safe way to do it. You collect the fees from the app, you use the fees to buy the token. That is a buyback program. It works in the stock market. It does work in crypto. I think some of these apps are going to do that. We're going to see that more and more. And as we see that more and more, some of these altcoins may be actually good. At least they're not going to totally suck. I think actually Pendle's going to do good in the next bull market because they have these new tokenomics, which is pretty interesting. Others, yeah, Chainlink, it's how they reward oracles. I think it's still going to be fine. I'm not sure. I think alts, broadly speaking, are dead though. Who wants to touch an alt? I don't want to touch any alts. I'm done with alts. I mean, I trade them. I do trade them because when you're running an algorithm that's basically a volatility scalping algorithm, you just want volatility. You don't care about the long-term trend. You just care, does it move or not? Does it do 50% higher? I mean, look at 50%, very deliberate because CRV was doing that. It went up by 50% between March and May. So you're bullish Bitcoin goes up 20%, this thing goes up 50%, and that's what altcoins do. Now, I'll be honest, if only speculators are involved in these, then are they really going to last long term or are they just going to get delisted? I think delisting is the fate of most of these. Now hype will likely do what? Yeah, hype is different. Hype is different. Let's use this one. This trades very well. Um, yeah, it has all the bells and whistles. I'm not even in this. I should be in this, but I'm not. But it's just it's a very short list of assets that are, yeah, 260. It's very decent. Buy, they just buy back their own token from the fees collected by the exchange, which is a very successful exchange. It's a no-brainer. This stuff works. This stuff works. Monero. Yeah, I think this one too. Yeah, Monero's good. Not, yeah, it's just a small universe, right? It's not like they're all dead. They're not all dead. Monero's good. Still trading around near highs. Extremely well. It's like what you want crypto to be, right? Very volatile, great for trading, and it's not crashing by 90%. It's holding up. Zcash is another one. They have this bug that they found and it crashed and it was nonsense. Nothing happened from the bug. So it crashed, then it rallied back up. That's another good one. Very small universe, but they are there. The good altcoins do exist. Tron is another one. Tron is near record highs, just like Monero, just like Zcash. Pretty good one. BNB is another one. It hasn't been doing very well lately, but that's BNB. I think it's probably hitting bottom right about now. And it's if you just zoom out, it's just in this. It was in this consolidation range at about 600 since early 2024. It had this weird rally, went back down to 600. It'll probably have a decent bull market too. Reprice higher, maybe to 1200, and then stay there for years. That's kind of how it trades. So this is another good one. Buyback program. It's used within Binance. Like there's a use case for it. I would say there's maybe 10 altcoins that are decent, and maybe more will come along. But this isn't the S&P 500, or probably, I hear it's not exactly 500 companies, but I would say all of those are good companies. Whereas in crypto, we have 10 assets that are decent, just 10. XRP is not a decent asset, in my opinion. I haven't looked at it in a while. What I like about XRP, credit to them, is that the company's not going anywhere. I actually bought Ripple stock, and I've been doing really well with that since I bought it. It's like 20x higher or so since I bought it. So in the secondary market, that if you buy the company, that's doing very well. If you buy the token, not really, but the fact that the company is doing so well means the token is not going to go anywhere, means you can probably trade the thing. So XRP for me is a trading instrument, just trading vehicle. Doge is an interesting one because, yeah, maybe. Doge is a maybe. I do trade it. Uh, it could do great things, just because look, it's not Elon Musk and the memes. It's the fact that this is one of the largest proof of work chains. That's what Doge is. Fixed emissions, which just doesn't have any of the halving problems that BTC has. The BTC halving is kind of nonsense, in my opinion. I've always had that opinion. If you want lower emissions, you don't have to cut the emissions by half. You just keep them fixed. That's what Doge does. And if you look at the long-term emission inflation curve, actually both trend towards zero, with halving and without the halving. Whereas if you don't have the halving, it's much more predictable for miners. And long-term, inflation-wise, it is the same. They converge towards zero long-term. You don't need the halving at all. You never did. You never will. My opinion, the reason you have the halving is because the guys who created Bitcoin didn't really understand economics. So they just, all you need is fixed emission. You don't need to cut it by half so that it's zero at some point. It is effectively zero if you just have fixed emissions. Vaporware. Yes, so I actually met the Doge creator. He had a YouTube channel, and he's a great crypto analyst. We interviewed him for a while. We wanted him to work for us. He didn't want to have anything to do with crypto. He was just burned out on crypto. He was early to be burned out on crypto. I'm getting there now. But not burned out as in I don't like crypto, I don't like the tech, but yeah, the industry is like, okay. It's a little, scammy. Always has been, and it's disappointing. Anyways, Doge was created as a joke, but it's a proof of work chain. It's a fork of Litecoin, I think, and it's merged mined. It's merged mined with Bitcoin or Litecoin. You can look it up. I don't know exactly which one it is merged mined with. I think it's either Litecoin or Bitcoin, which means it's just as secure as any other proof of work chain. And it is one of the largest proof of work chains. So sure, it was created as vaporware, but it was not designed as vaporware. It was intended to be vaporware. But if you create a proof of work chain that has fixed emissions and is merged mined with one of the largest proof of work chains in the world, then that's not vaporware. That is a proof of work coin. Again, it's just intention not meeting design, right? Yeah, the intention was a joke, but the design was not a joke. Every bit as robust, every bit as censorship resistant and decentralized as Bitcoin is. So because it's the same design. So it's the same thing. And it doesn't have these halving problems, which do not affect Bitcoin. I expect that at some point the halving is going to be a problem for Bitcoin, but I think it's been a problem for Litecoin because miners had to just shut down. Litecoin does have the halving too. And what happens is just miners need to shut down because price is not going to rally because you're cutting miner revenue by half. It doesn't have to. That never made any sense. Like people say, well, Bitcoin has to double because you're cutting supply, new supply by. No, it doesn't. Price doubles if people buy it. And just because the asset is more scarce doesn't mean more people will buy it. Exhibit A, Litecoin has not made new highs in ages. And it does have the halving. So this thing halves also every 4 years. I don't know if it's every 4 years, actually, but it does have miner reward. Are miners compensated because price is worth more? No, they're not. So when people say that it's destiny, that when the halving takes place, Bitcoin must double, it's fated. No, it's not. There's plenty of examples. Actually, every altcoin that does the halving is a counterexample to that prophecy. And Bitcoin is not special. It's just a proof of work chain. It is special in terms of being far more useful, far more liquid, far more adopted than any other uh, altcoin. I am not saying Bitcoin is going to do a Litecoin here and just go to zero. No, I'm not saying that. What I'm saying is the halving itself doesn't really make a lot of sense. You're just cutting revenue by half, and you're not really compensating miners in any other way. You're just not. Now, I do expect Bitcoin to continue to do fine for decades, at least for the next 10 years. But I do expect prices to plateau at some point, and I don't think it's going to double every 4 years. Just do the math on that. I'm not going to do it here, but just do the math on doubling every 4 years to see what the price of Bitcoin should be by 2140. I think it has to be in the millions of dollars per token. That's not going to happen. To me, the halving has always been Bitcoin's biggest flaw, and I've written about this. Now you can get around that if you increase revenues, miner revenues, via inscriptions and NFTs. But the community's against those. And there's another problem. Most Bitcoin now sits in custody. So most of the Bitcoin transactions we used to see on chain, they're taking place via ETFs now, and they're off chain. So most Bitcoin transactions, or rather, this was always the case, but now even more so. Because if you have the ETF, you're never, ever going to do an on-chain transaction unless you're doing redemptions, which only a few parties can do. So Bitcoin is kind of like an off-chain trading instrument, and yet you need on-chain activity to pay the miners to offset for the, in my opinion, design flaw that is the halving, which does not guarantee higher prices. The halving does not guarantee higher prices. Not at all. If it were true, then we would have the likes of Litecoin also being in a permanent bull market. Bitcoin's been in a permanent bull market because digital gold, which is a meme in and of itself. But we have the institutional adoption now. We have the people saying, hey, it's digital gold. We have the institutions. We have all of this adoption. And the view is that this is a hard asset in a world where we desperately need hard assets. So I think Bitcoin is fine. But yeah, it's not fine because of the halving. And no, the 4-year cycle is not there because of the halving. I don't know if you noticed, but I found the exact same cycle on Bitcoin, which is actually it's about 4 years, 3.5 to 4 years, on the Hang Seng Index. And Hearst had this cycle. He wrote about this in the 1970s. There was no Bitcoin at the time. 4-year cycle has nothing to do with the halving, and the halving has nothing to do with why Bitcoin has done so well. These things are not connected. And again, counterexample, just here's Litecoin struggling because of the halving, among other things. So I actually long term, you could say I like Doge more because it doesn't have this halving. But because for that component only, Bitcoin needs to get around this at some point via higher fees or a fork that just does away with the halving altogether, because it's not going to double every 4 years. It's not going to do that forever. It has done that, but it will not do that forever. So yeah, BTC hasn't always followed Japanese M2 so closely. So any idea why and when it could start following some other liquidity closer or bonds? Well, let's look into that. Let's look into that. Any idea? The short answer, Perry, is no, but uh, it will happen at some point. Let me delete some of these lines. Can I just delete everything? There we go. So no, it hasn't always followed it so closely, but it has followed it very closely for a long time. That I can tell you. It even back in 2021, this is probably the only liquidity proxy that was doing that topped out in early 21. This is 2021, and had a much lower high on October, November 21, and a bunch of on-chain metrics did the exact same thing, which is very interesting. This is the only liquidity indicator that actually tracked on-chain, and a bunch of altcoins topped out here. Oh, actually, I think altcoins back then were doing good going into November. But look at this. This is a great. I know it doesn't predict price. I get it, but it is quite interesting, right? It even has this 80-day cycle correction highlighted here. So Japanese M2 was already very, very good even in 2021. But if you go back, if you keep going back, you're going to find that a correlation breaks. Here, it was already broken. Like, look at this. 2019. It was not as good. It was still good. It was still good. I mean, it had it would highlight these lows. But for instance, you would never see this nowadays where we have a prominent high here, March 19th. There's no such high in Bitcoin. The next prominent high is October 19th. We have no such high in Bitcoin. I mean, we do, but the actual top took place in June. And what is this, an inversion? We don't have any such top in June of 2019. I mean, already in 2019, this correlation was not as tight. It started being super tight in 2020, but it was still there, which is why if you do the Granger causation test, it will show up as being very good for Bitcoin, even in 2019, 2018, just not as good. It did nail this low. So back then it was like a very useful indicator, but it wasn't the be all end all that it is today. Um, it was more like my forecasting models where, yeah, they're great, but sometimes they're gonna miss. That's how liquidity or Japanese liquidity used to be for Bitcoin. It was great to have, but you needed to be aware of the fact that sometimes it's just gonna miss. We have this top here too. You can see how there is a correlation. It's going sideways here, then it dips. Like this is useful in 2018 and in 2019, but it's not be all end all. If you don't see it in liquidity, you're not going to see it at all. Forget it. That's how it is now. If you don't see the rally in liquidity, you're not going to get it. Whereas here in 2019, you could still get it. It doesn't. It gets to stop. It's still useful, but not the crystal ball that it seems to be today. And if you keep going back, you're going to see at some point this correlation just breaks. Let's keep going back. Here already we have a serious correction. We see no such thing in Bitcoin. Bitcoin's rallying. But it can do that still in the present day. It's more rare, but it can happen. It was still rallying. I think if you go to the very early days, that's when it breaks. By the way, this is the first time I'm looking at this. It's pretty remarkable how close it is, though. It's very remarkable. I hope you agree. I mean, this is incredible. This is 2015. 2015. Look at this cycle. It's exactly the same. Boom, boom. Perfect cycle. And then it rallies, and Bitcoin's rallying. And it spikes higher, and Bitcoin spikes higher. And it's shocking. This correlation is shocking. It is the most shocking thing I've ever found. Only problem I have is I wish I could do the same thing for other assets, but so far I have seen that the yen, because by the way, the price of Japanese yen is just basically the price of the yen versus a dollar. That's basically what it is. It's remarkable how good it is for predicting Bitcoin. It's remarkable. Look at this. I mean, again, this is 2013, 2014, not as good. Admittedly, not as good. But come on, I mean, it is still remarkable. It's still saying, hey, you could tell, by the way, in 2013 that this is overbought. It's a parabolic run. And Japanese M2 is dipping, and it has a serious correction here. Lines up pretty well. But then, of course, you can see now, if we zoom out, it's just not as tight. It's just not as tight. Japanese liquidity is going flat here, and Bitcoin is already, significant bear market. And if you keep going back, you're going to see a total breakdown already. Yeah, here. So 2013 total break already. 2012, 2013, there's just no correlation. I mean, there's something there, but yeah, it's not great. Um, yeah, there's just nothing there. There's just nothing there. So the correlation has matured over time, Barry, to answer that question. I mean, it has gotten closer. So looking at this, actually, I would say that maybe it stays this tight because what we can see from our walkthrough is that that correlation as time advanced became more and more itself. And nowadays in 2026, it's very tight. But even in 2016, 17, 18, you could still use it. You could still use it to make remarkable forecasts. I'll say this. You could use it to make remarkable forecasts. My own forecasting model did not work as well in the early days. In 17, 18, 19, it doesn't work because Bitcoin doesn't have defined cycles in these early days. The first 6 or 7 years, the cycles are not tightly defined. And so my algorithm doesn't work. Japanese M2 does. I mean, it predicts something at least. It was very difficult to predict Bitcoin at that time. I mean, it was difficult and it wasn't, right? Because it was very few cycles. It went parabolic. It had the halving cycle. It was very regular. But using like pure cycle forecasting tools, when I started in 2017, it was very difficult. This is probably the best tool available at the time. Probably. And it's even better now. And it is the yen, guys. Let me show you how it is the yen. Uh, I need to build that chart. How do I build that chart? Hmm, not so easy. Let me see. New layout, GPY, BTC. Eh, Whenever it wants to load. I'll get to I'll get to H bar in a minute. I actually went to their founding like their first and only conference, I think. It was in Dallas. First and only time I've been in Texas. I loved it. It was great. Great event. Great event. Let's see. So Bitcoin and the yen. We need to bring up the yen. USD, you can see I've already been doing this. USD JPY. I think it's the opposite. Let's see. Let's bring that up. New right scale. Yeah, I think it's inverted. Let me see. It might be that we need an inverted scale. I don't know this from memory. Yeah, I think it's an inverted scale. Yeah, it's an inverted scale. Get rid of that. So this is the price of the yen in dollars. You can see that also there's some sort of real-time correlation too, but the best correlation is the 84-day offset. The way I do that, a lot of people ask me about this actually. The way I do that is I'm going to move Bitcoin backwards. In this case, I guess I could do it the other way around. Just move it forward. Let me do it the other way around. So we're going to bring up the yen. -1. If you want to flip it, just do -1 USD JPY. Or you can use yen futures in the CME. That's how they trade. It's the inverted version. I don't want crypto. FX USD JPY. Never actually done this. I'm curious to see just how tight it is. All right, so now we bring in a 1-day moving average, SMA, just a 1-day moving average, which we can move forward. So there we offset it by 84 days. And boom, this is our forward-looking yen. And now we're gonna bring in Bitcoin. Bring in Bitcoin, index, new chart, new scale. There we go. And we hide the yen because this is real time. You can watch the replay and see how I did it. And make this, I want to make this a little thicker, thick coat. And I'm going to make this orange. Settings, style, orange. Orange is Bitcoin. So I don't think the correlation is as, why are these not fitting? There we go. It's not as great as using Japanese M2, but it still works. It still works. This is not even this is just using the price of the yen to predict Bitcoin. And it still holds up. I don't know what's going on with these charts. Regular. What's going on? Where is it? Uh, it doesn't fit. Nah, I can't. I don't know what's going on. Why it doesn't show it correctly. Like it won't fit. Okay. Now we got it. So, just the yen was pretty good for predicting Bitcoin. This is, by the way, this is not Japanese M2. This is just the yen. Not what we use, but still useful because it's just dominated by the yen. It's pretty much the same chart. If I bring it up, global liquidity, you're going to see that they're very, very tightly correlated. Just yen, Japan M2. There we go. Make this red. Move this forward. There we go. Oh, I hate that. Visibility. We don't need any of this. Tables, all of that stuff. We don't need any of that. So you can see that blue and red are the yen is blue and red is Japanese M2. You can see that it's pretty much the same thing. Japanese M2, because it grows over time, tends to be a bit more bullish and it tends to correlate with Bitcoin a little better. But you can just use the yen, which means that Bitcoin has been following the yen for about maybe 10 years. Been following that very closely, 84-day offset. But you can see the same kind of predictions, cycle type price action that we could see before with Japanese M2. If we have the yen, it's like a more bearish version of Japanese M2, which is not as good as a predictor, but still very good. So just all this to say, it's really the yen-dollar exchange rate that leads Bitcoin price action by 3 months. And M2 growth, which just grows, M2 just tends to grow, adds a little bit of color. That's really how it works. That's how the correlation works. You can see, for instance, if we go to 2021, the top in 2021, Japanese M2, the red one, so this one, Japanese M2 clearly shows the sell-off that took place, followed by the rally that took place, and then this flat period. Bitcoin was rallying against a flat Japanese M2, which is kind of a bearish indicator in and of itself. But if I bring up the yen, there's no such rally. It's not as pronounced. It's not as obvious. Still has the bounce, but it's just much more bearish. Which means, because I've tested these two, you should still use Japanese M2. But you can just use the yen if that's not available, and it's pretty good. It does a pretty good job, which is important because what it means is that what we're really looking at here is the dollar yen exchange rate has some predictive power on Bitcoin, very strong predictive power on Bitcoin. And then if you add the growth of M2, so the growth of the money supply in Japan, that gives you the full indicator and the full view or the fuller view and the best type, the best forecasting indicator. All right, moving on. Sorry for the detour. I just really wanted to look at that because I wanted to show you how what I mean. It's really the yen dollar exchange rate, 84 days later, and then JPM2 just grows, and that does add some color. Um, H bar. Honestly, even though I was a big fan of this project, and they had an event or there was something going on with H bar at Consensus in Miami in May. Not bullish at all on this thing. Just a price. Just look at price. I actually bought the SAFT into the SAFT for this. So I got in at I don't remember what the floor price was. I think it was 12 cents. That's what it launched at. So if you could participate in the SAFT, which is SAFT is simple agreement for token distribution, something like simple agreement for token distribution, something like that. The SAFT. And 12 cents, I think, is what we got in 2018. And it's trading for 6 cents. That's it, you know. That's it. That's all you need to know, in my opinion. Not doing well. About the project itself, the technology is amazing. It is super good. It's not a blockchain, which is why at the time in Dallas at the conference, they were trying to popularize the term. Man, those were the days. 2018, I think it was in October 2018. And so they were trying to popularize the DLT concept, distributed ledger technology, because this is not a blockchain. This thing is not a blockchain. And I don't remember exactly how they reached consensus, but it was remarkable. The guy who created it, he's like a mathematician. I think he was out of some university. Is there such a thing as a University of Texas? I think maybe he was a genius, and he created this algorithm that would do the same thing that Bitcoin does or a blockchain does. Had none of the downsides, super fast, strong security guarantees, very solid technology. And on top of that, they put the EVM, so the Ethereum virtual machine. On top of that, solid technology. It didn't work out. They also had this governance layer where they wanted to invite the likes of Visa. They were copying the Visa model, which is a Visa is a consortium of companies. I actually didn't know this. It's a consortium of companies that kind of act as a governance layer for Visa. And they wanted to do that for HBAR. So they wanted like Google and just a bunch of other tech companies and banks. Like, they wanted companies from several different industries to sit on their governance board. And I believe it was 32 of them, I believe. It was a great idea, very well laid out. They had this thing going on at Consensus, so maybe there's some activity under the surface and I'm not aware of. I can tell you just from looking at price that people are not excited about this at all. Trading at 6 cents, that's 50% discount from the SAFT price, so the token launch price. Not a good look. No reason to buy this. As far as I'm aware, it's not like they have like staking rewards and high inflation or anything. This is just lack of usage. This is just people not using the thing. Could that change? Of course, that could change. But just, yeah, I mean, I wish them the best, honestly. It's a great team. It's a great project. I loved it. I thought it would do great. I made a lot of money on it too because I did sell when it was 50 something. Like, well, not a lot of money. That's not even true. I didn't sell in October. I think I sold earlier than this. I saw it rallying and I sold everything. Just because by 2021 it's been 3 years. And where are the apps? And this is how I judge a layer one. That's why I like Solana, even though I'm not a big fan of their technology. I'm not a big fan of their technology, mostly because it seems to me that Solana is subsidized. The reason they have low fees is because of inflation. right? It's very expensive to run a Solana validator. So what they do is they mint a bunch of Solana, and this is how they pay validators. And that's just not sustainable. Now, of course, Solana is betting on so much usage that even though every individual transaction pays a very small fee to the validator is still well compensated for the work of validating the chain. I think, of course, it makes sense. But right now, we're not really seeing that. It's not sustainable. In fact, the only sustainable chain is Ethereum. Ethereum pays its validators with actual activity. It's, I think, the only one. Still, to this day, even though most of the value is being created in layer twos that do not pass that value down to Ethereum. Even though it has that problem, I think it's still, Ethereum is still the more sustainable one in terms of fees paying for the validation of the chain. Whereas Solana, HBAR, Bitcoin, I read recently, I think it's 2% of miner revenue comes from fees. I mean, that is not sustainable, especially with the halving, which Solana, I think, doesn't have. Ethereum doesn't have these problems. They have fixed emissions. They don't have to think about that. They can pay their validators through inflation forever, as long as prices don't crash. So yeah, any other questions? Because otherwise, I'm going to wrap it up and head for lunch. We didn't do TradFi at all, so if you want to look at that, we could. All right, so I don't see any more questions, you guys, so I am going to wrap it up. Yes, oil drives the global market. Oh, Perry, all right, okay, let's look at oil. I see a comment from you. Maybe this was an update. So the shocking part for me about indicators like Japanese M2 and the 84-day offset is the consistent key. Why that number? Great question, Perry. I'll give you two answers. So the question is, why 84-day offset? Why does Japanese M2 predict Bitcoin and crypto by 84 days? Two answers to that. The actual answer is you can actually do something called the Granger causation test. What that does is it will move forward the data series that you're trying to predict that you want to use as the predictor, right? Causation meaning one causes the other. It doesn't mean one causes the other. It's just a statistical test. And what you do basically is you just first of all you have to annualize this stuff. So do like a year-on-year rate of change, and you also need to apply a log. So it's log year-on-year change. I think that's how I did it. That's how you need to do it. The reason I'm bringing that up is because I've seen people on social media. Raul Pal is one of them saying, "Look at the correlation between the Nasdaq and my liquidity thing." Yeah, of course, because they are both moving up into the right, and so of course they're correlated. Doesn't mean anything. It proves nothing. You need to detrend. You need to apply logs and then detrend the series. So once you have that, what you're going to have is basically two sine waves. Okay, and then you're going to move the one that you think is the predictor. You're going to move it. You're just going to move it from no predictor, so real time, and then you move it step by step to see where the greatest correlation is. And that's all it is. So you're just looking to see if I move this data series with respect to the other. So if I move Japanese M2 forward relative to Bitcoin, at which point do I have the best correlation between the two? And it comes out at around 84 to 87 days. And not just with Japanese M2, with central bank liquidity, M2, all of them. It's about 80, 84, it's like 83 to 87 days, something like that. Now, why that number? Well, because the facts bear that out. I mean, that is the number, very consistently between 82 and 87 days. Now, what is that number in planetary cycles? It's the Mercury orbit, and Mercury rules trading and the movement of money, but not really money. It's trading and information and all of that stuff. And it's a very important cycle for trading and financial markets. It just so happens that that is the most common offset. It's 84 days. So it's quite remarkable. I don't know why. Again, that's not an explanation, really, this Mercury orbit thing. It's just like, hey, it just so happens that is the Mercury orbit. I do not think that's a coincidence. And I don't think it's a coincidence because I have tested other planetary cycles, and yeah, they predict markets. So this thing seems to be related to that also. This 84 day is not a coincidence. And I believe Japanese M2 specifically is actually closer to 86 or 87 days. So actually almost exactly the Mercury orbit. And no, I do not think that's a coincidence. But without getting into the woo-woo, you can just do the test. And the test will tell you what the offset is. And just as a counterexample, bonds predict Bitcoin by 13 months. So yeah, it has nothing to do with I hadn't looked at this in a while, actually. Let's look at this. Central bank liquidity versus the bond market. Let's ignore central bank liquidity for a bit. Look, it tells us that we should be hitting a low. Oh, so. But it rallies strongly into September. So bonds predicted by 13 months is 50 some weeks. I do not think there's any planetary cycles that match that duration, but it's the same test. I just did the same test and it came out to uh, 13 months. Or I have it here at 56 weeks. So it's 56 weeks for bonds versus Bitcoin. So it's not always that magic number, magic 84. I will say though that bonds do not predict Bitcoin as nearly as strongly as liquidity does, not nearly as strongly, but sometimes it is quite remarkable. I think in 2015 it's like very close. Um, it has it is still something worth watching. Just put it that way. 2015 is like very good. Now you might say, well, it's not that close. Yeah, keep in mind you get this picture 13 months ahead of time. So it's still very useful. The way I use bonds, I know nobody asked me, but the way I use bonds to predict Bitcoin is it gives me a picture for what to expect for the next 12 months. It's 13, so that's a year, right? So the year starts and I get a full outlook for what to expect for the next 12 months. But you need to check against liquidity. So if bonds disagree with liquidity, bonds are wrong. So you have the picture for the next 12 months, and then you have the picture for the next 3 months, which corrects the prediction from the bond market. Right now, the prediction from the bond market is being corrected by liquidity because what it's saying is after this low, right, in late June, which we have, this is when Bitcoin bottomed in late June, it predicts a just unstopped rally into the end of the year. Japanese M2 has already contradicted that forecast. What Japanese M2 is saying, which is the correction for that year-long prediction, that 30-month look ahead. It's been corrected. It's saying, no, you're going to get the low in June, but you're just going to top out in August, head back down into October. We do not have this in bonds. So I have not been using bonds lately because the moment bonds deviate from liquidity, stop using bonds. So start looking at liquidity again and look for times when they match. Because at some point, bonds and liquidity will realign again. But right now, as long as they're not agreeing with one another, we just stop listening to bonds. We just look at liquidity. All right. 56 weeks offset for bonds, one of the other planetary orbits. I don't think so, but maybe. Maybe it is a combined cycle. 56 weeks is about a year. So that will be the Earth. And there's nothing close to it. So maybe there is some combined cycle that is 56 weeks. I'm not aware of it. I don't know. Oil. Oil. Does oil drive global markets, Perry? I would argue no. At least not anymore. Look at this is inverse oil versus the stock market versus Bitcoin. It used to track Bitcoin. So Bitcoin used to track oil rather, inverse oil. Not anymore. So we can get rid of that. And is oil inverse oil rather, because the correlation is inversed, obviously. Lately, it's okay. Man, yeah, oil did top out on April 7, stock market bottomed on April 27, and they have both been rallying since. So, okay, stand corrected a little bit. It is still somewhat predicting global markets. I haven't looked at forecasts for oil, for oil. Let's take a look. Let's take a look. The trading strategy for oil, by the way, is super good, but it doesn't rely on that. It relies on a 40-day cycle. So it's very active. And so when this trading strategy nowadays is using a very short-term cycle forecast, I stop paying attention to the longer term stuff because it doesn't matter. And I'm going to show you that 40-day cycle forecast on oil is not even that good. So this is why I said at the beginning, you can have a very pretty mediocre forecasting model. And if you add some money management and some risk management on top of that, you can have a great strategy. So this thing, let's look at it since it's used for trading. Um, okay, well, it's predicting a high for March. I think we got that. And a low for June. What do we have here? July 2nd. Let's look at some other stuff. The next one I will look at is this one. Um, what is it doing? It's topping out in July. Has oil topped out though? No, it's this model is probably inverted. So we have a July turning point. Let's switch back because that July turning point appears significant. This is not a great model either. Let's look at this one. This one has already been. I know all along that the long-term cycles on oil point to a high. So they pointed to a rally this year and then a big top sometime this year. So we don't have to look at those. We can look at the shorter term stuff. 240 days. We have the July. This is like probably the best model to use for forecasting oil is this one. Even though it doesn't have good numbers. I don't know why. 20% correlation is not great, but it is a great model. I've used this a lot. It's pretty good. So what we have here is this top in July. Have secondary turning points in November and October. Let's look at that July top. Let's look at oil proper though. July. July's, what was it, 12? We had a major turning point, but see, I changed. That is the July. It's July. So now it's July 12th. On the older version of the model, it was July 16. That is the same turning point. And it appears that I was correct. Oh, this is not good news, actually. I haven't looked at it. And look, this is from the last AMA. We had these major low here. This produced the rally. We had turning points here and here. Both of them were highs. We had a high here and it produced a high. We had a low for May and it was a high. Very obviously, it was a high. Now, the actual forecast with the revised methodology, it revised it and it went and moved it to the 12th of July. So it's a little closer to where the low is. It appears this is a major low. But thanks for having me look at this, Perry. I had not looked at this. This appears to be a major low. This is from the last AMA. And it looks like it's on track. Now, if that's true, and I hope it isn't, that's true, then this is generally an upwards trend into January. Man, that would suck. There is a secondary turning point on November 3. So we clearly have the low. The next turning points are November 3, which is minor. It's good to see that it's actually it did work out, even though it inverted. So this was supposed to be a low. This was supposed to be a high. They flipped. That's normal. We have a next turning point here, which should be a high. Hopefully it is a high. But the next major turning point for oil, since these are working, let's do the next one. I'm actually looking at it here. I'm not going to switch. January 28th. So Jan 28th. That's the next major one. That's major. And this too is major. So it appears, just reading the forecast, that we have a major low here. So if we do, then that's going to drag everything lower, which is what we're expecting anyways, right? For Bitcoin, for the stock market, I'm expecting that. I wouldn't have time to go over that today, but yeah, I'm expecting the stock market to be weak also. And this could be on the back of, man, I thought we were done with this Iran thing, but it looks from the forecast, it appears to be I believe I said at the time, because we recorded this on June, mid-June, and I think I said at the time, I don't like the fact that this May turning point looks to be a top, because that means July is going to be a major bottom. And if July is a major bottom, then this Iran Middle Eastern thing is heating up again. Now, there's a chance, very small chance, this thing is resolved by November, but it may be an uptrend that does not end until late January. And that's interesting because I am seeing February and January 2027 show up on Bitcoin as a major bottom. It shows up as a major bottom for the treasury market, and it's showing up for oil too. So yeah, we're not done. And let's see, the 40-day is going to give some color to that. So intermediate turning points between now and then. June, we're past that already. We have July, that's the bottom. This model 40 days inverted. We have a major high. Yep, in November. November could be a major. We have some intermediate turning points, September 14, October 8th. None of these appear major. The next one, according to the 40-day forecast for oil is exactly this. Shows up as a top though. So it may be, since the model is inverted, it may be that oil is rallying into November, selling off into February. That's what I want to happen rather than what might happen. January 2027 as a bottom. Yeah, look, that's possible. It looks like it's possible that we're gonna have a high in November. What I'll say about oil too is that the long-term cycles, I'm gonna switch to that. So I do want to show that the long-term cycles are bearish. So, and these are the best models for oil. They're the most reliable. So this shows, yeah, this low in February with the high being in July. So, well, maybe it's inverted. But I think the long term, the 4-year cycle is definitely showing, and this is a decent model. And it's not showing a super big uptrend. And notice that it's the same low, January. So it looks to me that January probably going to be low in oil. If I had to guess, let's put it out there because we can check again and let the record show we got it right. We have a July low. Looks like the high is going to be here. Looks like this will be the top. Top. Reason I'm saying that is because the long term, there's a 4-year cycle in oil, and that was bearish for the second half of 2026. So I don't think it's going to invert or anything. And everything shows a bottom in January. Everything. So looks like it's going to cool off from November to January. January and February are showing up in Bitcoin, oil, stock market, the treasury market. That's going to be a big one. But we don't have time. We should not speculate on that. It's too far away into the future. So Perry, I'm gonna skip gold and silver because I do have to go. So I'm just gonna go for this. I mean, gold and silver, honestly, what is there to say? They're bearish. Not gonna go through silver. Silver's gold. It's just redundant. It's like doing Bitcoin then Ethereum. Gold is bearish, as far as I'm concerned. This is a confirmed top. And I was looking at it. I have a friend who's a massive gold bug, and he thought that the low is in. So I remember showing him I said, listen, let me show you my model. And sure, we can discuss it. The model can be wrong, but I don't think it is. There is a cycle. This model, this forecasting model for gold, the 3.5-year cycle, it's amazing. It's very good. And it's just, and Perry, you have access, guys, you're going to have access to this. I check this out. Just click on gold, 1280 days, 3.5 year cycle, the same one that Bitcoin has. Look at this. Tops. And it nailed it. It sets the highest in February 26th. And you can go back and you can see this model nails it. It nails the shape of the move. It nails the highs and the lows. It nails it. This is a very, very good model on gold. And it's funny because it's green. It's not purple. Remember when I said purple is best? But I've seen this where the correlation for whatever reason is not fantastic, but the model itself is very good. Because correlations do not take inversions into account. By the way, the trading strategies do. So they don't actually look if it's a high or a low. They just look at what's happening around that time. And look, it's just nailed this high. And there's another 2 cycles in gold. I have identified a 7-year and a 14-year cycle. And they're all topping out. This one also almost to the day. So the new version is pretty good for gold too. This is the 7-year forecast, also topping out. And the 14-year forecast, which is not so reliable, but it's also topping out. So 14-year topping out, 7-year topping out, 3.5-year topping out. These are very good models. Not the 14-year, this is not so good, but the 7 and the 3.5-year cycles, very good for gold. Like the forecasts, they're very good. And then we have this 21-month cycle, which I believe is also topping out. Now, to add some color to that forecast, it appears that gold might have a bottom in October. So the big picture is bearish for gold, but there might be a rally that is significant. There might be a significant rally in gold. So let's go back to that. And it starts in October. Oops, I didn't share. Starts in October. There we go. So it may be that gold just doesn't do much between now and October. And then we're going to have a very decent rally. It takes us through to the first half of this is a decent rally in terms of duration. So gold looks like pretty soon there is a buying opportunity here because it shows a bottom in October, but I haven't looked at the shorter term cycles. They probably show some bounces here as it bottoms into October. And then it rallies. But because of the longer term stuff has topped out, I would say gold will not go higher than this high. So 5,600. Maybe there's a retest. Maybe it exceeds it slightly. Maybe it goes for a double top. But this thing, like if you're waiting, if you want to go back to the easy times, the easy days when it was just rallying nonstop, those days are done. Pretty sure those days are done. Again, these forecasting models, the reason they're so good for gold is because they were not very good at first. So I did a lot of work on gold, like how to isolate the cycle better, how to study the frequencies a little better, how to break them down better. And now the models, I'm happy with them. I'm happy with where they are. And they are some of the best in the entire suite of forecasts that you're going to have available. And so I pay attention. So let me answer that question, Perry, and then I'm going to sign off. So when using the cycles or indicators, is there any way to know when there will be a reversal, inversion in expected price action that is such a wild card? For example, to expect a high from the indicators, but actual price instead decides to invert for a while and produce a low. It's frustrating. The losses are then double or worse, especially if feeling overconfident and leveraged in. Why do inversions happen? Inversions happen because the reason I believe happen is because planetary signatures can correspond to highs or lows. And yet in the way I train the models, I force them to either be a high or a low. I force that into the prediction model. And sometimes it can be wrong. Sometimes it can invert. Now, how can you tell that there's an inversion? Actually, it's not that hard. It's actually pretty easy. The way you do it is, let's say you're predicting a 40-day top, or let's go to Bitcoin. So it's easy for my algorithm. Okay, so let's say I have a turning point for June 29, 80-day cycle, right there. June 29, boom, right there. That's a turning point. It shows up as a low, but ignoring that, what is Bitcoin doing 20 days prior to that low? Is it rallying or falling? What's the rate of change in the last 20 days? Low. Okay, so it's not going to be a top. This is obvious. Now, the way I do it formally, and this is how the trading algorithms work, by the way, is they don't look at prices going into the turning point. They look at prices going out of the turning point. So that you apply like a 12% window, which in the case of the Bitcoin 4-year cycle, 80-day cycle, it's about 12 days. I think it's 12 days, 10 days. Yeah, I know it's 10 days. So 10 days here. So you have the forecast, which is the red line. That's how I do it. Now I have the algorithm do it, so it sounds complicated, but the computer model can do it just in a flash. So it looks at this. So you have the turning point, you have this window, and then you want to see if you can confirm an 80-day cycle low or a high, a turning point within the window. And whatever it is, that's what it was. Now, if you're an analyst and you want to see what's happening, just look at it. Sometimes it's so obvious. Prices are falling into it. It's not going to be a high. It's going to be a low, obviously. So you look at them as turning points first, and then you have a sense of direction second. Now, I'm going to formalize it. This will be in the app. The app will highlight, it will say like low forecast, and then there's going to be like a warning sign saying likely inversion or inversion likely. So it's going to warn you that that's happening. I haven't figured out how to do it yet. I'm showing you how I'm doing it, but it's a bit trickier if you want to formalize it. Now, the way the trading algorithms do is they're looking to confirm a turning point, which I could do. I think maybe that's what I'll do. So I'll say, well, I had an 80-day forecast for a high. I do have a low within this window, so I'm just going to say, hey, that's probably inverted. There are other options. There are other alternatives. So I haven't settled on one yet. But it's not that hard, actually. It's not that hard. Just don't look at them. Look at what prices are doing. I think that's how it's easy for me because I know they invert. So I'm not looking at oil. How did I know that it was inverted? Um, well, this was the turning point. May 13, what is oil doing? It's rallying. It's not bottoming. There was a possibility because sometimes they land in the middle, and so there was a possibility that we could get a double bottom between mid-April and mid-June, and the turning point was sitting right in the middle. So when we got to the second half of June, it kept selling off. It was obvious that thing inverted. So I wish it didn't invert, but they do, and you have to watch for that. Now I'll do some more work within the app to highlight inversions, but you still need to just look at it and make sense of it. All right, that's gonna be it because I am a bit tired, almost 3 hours. So thanks everybody for joining. I post the recording on YouTube when it's done. It takes hours for Zoom to process these. Oh, I do want to comment. Perry's saying, isn't US repricing gold to 20K to pay off the national debt? Yeah, no, I don't think so. Maybe long term it does go to 20K, but short term, no, 6K was the top. Anyways, I'll see you all in Discord. Sorry if I don't get to your messages. I am busy building the app, I promise. I'm not just playing around, just busy juggling with too many things. But thanks for joining. Especially thanks for those of you who are stuck around to the end. And I'll see you all in Discord.